Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
How about stretch preferred stock on Roxom? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxom gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxom to your clients. Corporate traders, asset managers, old, young, Stretch on Roxom is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
We are in heaven at 11.5%.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Welcome back to RoxomTV. My name is Walker America. I'm here with you every Tuesday from 1 p.m. to 4 p.m. Eastern Standard Time on RoxomTV. The price of Bitcoin is $76,454. Infinitely printable Federal Reserve notes per coin. We've got a great show ahead of us today. We're going to be kicking off with Zach Cohen from Bitcoin Policy Institute here in just a few minutes. Then we've got a few more guests as well. It should be a heck of a show. We're going to go ahead and dive right into our first story and get you guys some signal before we bring Zach on. Because over the weekend, strategy chairman Michael Saylor hinted the company was preparing for another move. Posting on X, "This week we bought bonds, not Bitcoin. The BitVac is charging." Today, strategy confirmed exactly what happened. Instead of buying more Bitcoin, the company announced it completed a massive $1.5 billion debt repurchase program, retiring convertible notes while maintaining its Bitcoin stack at 843,738 BTC. Wow. The company also reported a 13.3% BTC yield year to date, one of Strategy's key internal metrics measuring Bitcoin growth relative to shares outstanding. In other words, Strategy is strengthening the balance sheet while preparing for the next phase of accumulation. Meanwhile, rival Bitcoin treasury company Strive Asset Management is accelerating aggressively. This morning, Strive CEO Matt Cole announced the company acquired another 1,109 Bitcoin for roughly $85.4 million at an average price of $76,988 per coin. That pushes Strive's total holdings to 16,500 BTC. The company says that its SATA vehicle has now achieved a 23.4% BTC yield year to date, with what it calls a 45.2% amplification ratio, essentially using capital market products to increase Bitcoin exposure faster than spot accumulation alone. And the market is noticing. Strategies STRC and Strive's SATA products are both designed to attract fixed income capital into Bitcoin treasury strategies while trading near a $100 par value. Beginning June 16th, Strive says SATA will become the first U.S. listed security ever to pay daily cash dividends, another attempt to pull traditional yield investors directly into Bitcoin exposure. Strategy still dominates globally with 843,738 Bitcoin, but increasingly the real story is no longer just who owns the most Bitcoin. It's who can build the most powerful capital machine to keep buying more. Now, right now, that does still appear to be Strategy by a long shot, but it does appear that Strive is really making moves. Whether or not Saylor decides to counter Strive's daily dividend with SATA with an STRC hourly dividend or something like that, I'm joking, of course, remains to be seen. But I think that this is such a fascinating story. I think that it's fascinating on multiple levels too, because I think there's this admission now sort of amongst, let's say, the crypto folks and the big, crypto casinos even, that this strategy, Saylor's strategy, which has now been adopted by other firms like Strive and others as well, of course. But this appears to be a pretty good strategy, right? Instead of trying to create infinite different shitcoins and, market them to plebs and, dump on retail after having insiders get massive allocations that they, again, then use to rug retail, leave you holding the bag. These guys are creating products in traditional financial markets that are backed by Bitcoin, that are powered by Bitcoin, using Bitcoin as sort of the base layer for their own, let's say, fiat financial stack, but providing something that obviously the market very much wants. We've seen incredible desire for these different fixed income products. And this is, not just coming from institutions. I believe actually Saylor confirmed that, the majority of people that are holding STRC right now, it's a lot of retail. So this isn't just some specialized financial product that is only available to, certain investors or certain firms, certain institutions. It's something that anybody can access very easily through any brokerage account. And now you may say, depending on, look, if you're like me, you're in the, the growth phase of your wealth journey, let's say, right? You may not be super interested in these fixed income products, these dividend products, but that doesn't mean that other people aren't. A huge swath of investors want exactly this. They want somewhere that they can park capital and get yield on it. And again, you can say, well, you should just hold spot Bitcoin instead. Sure. Yes, you're free to do that. Nobody is stopping you. You should do that. Absolutely. But right now, what Strategy is doing, what Strive is doing, they're meeting people where they are. They're giving people products, financial products that they actually want. And clearly that strategy is working. And I mean, it is pretty remarkable to see. Let me check that number again on Strategy's 843,738 Bitcoin. That's just a mind-blowingly large number. And I don't think that at this point it's feasible that any treasury company ends up catching Strategy in terms of total Bitcoin exposure. But it is interesting to see these other treasury companies like, Strive is really leading the charge on this in terms of other, upstarts coming and picking up the Saylor strategy. There's clearly room for more of these products, right? There's clearly more desire from the market. There's clearly more people that want to utilize these types of financial products. And again, these guys are giving the market what they want. So it's not a matter of, as a Bitcoiner, I've seen a lot of different takes on these different, financial products. And are they, good for Bitcoin? Are they bad for Bitcoin? Are they, should you be using them? Whatever. Again, that's a personal decision. Do whatever you want with your own money. That's kind of the point of Bitcoin. Nobody can, tell you what to do, right? But I think the point here is that these are ultimately very beneficial to Bitcoin holders in general, because they are vehicles by which more Bitcoin is removed from the open market. More Bitcoin is removed from the float of coins that are out there and available for sale at any given time. And again, I think that the more people that get Bitcoin exposure, even when it's indirect exposure, right? Nobody is saying by owning Stretch or by owning SATA or by owning MSTR, by owning Strive, you don't have any claim to that Bitcoin, right? Obviously, if you didn't realize that, well, now you do. But I don't think that anybody's really laboring under that delusion, right? You're buying it because you're buying something that is utilizing Bitcoin to, in the case of the underlying security, MSTR or ASST, you're buying it because you believe it's going to appreciate in fiat value faster than Bitcoin. Again, you can have your own thoughts about whether that's the right strategy. It doesn't matter. Let people do what they want. You do what you want. Everyone will be happy. When you're buying these dividend products, you are obviously wanting cash flow, right? And again, you can say whether or not people should be doing that or just holding spot Bitcoin. That's a choice for every individual to make by themselves. But the point is that all of these products, whether it's the underlying equity or these dividend instruments, they are still utilizing Bitcoin in some way, right? Whether it's holding it on the balance sheet, or whatever these companies are doing. And there's probably going to be a bunch of other strategies that pop up here. No pun intended. Strategies that pop up here and try to do similar things or try to create new and novel ways of financialize, putting different financialized wrappers around these things. But the point is that they still provide people with a vehicle by which Bitcoin number go up makes them happier, right? Whether it's because they're getting paid a dividend or whether it's because the price of the security that they purchased is going up and up and up. And the more people that have some sort of Bitcoin exposure, again, that's why I think the Bitcoin ETFs, personally, not for me, I'd rather have spot Bitcoin, right? But they're great for a lot of people and they're still getting people more exposure to Bitcoin. It's widening that Overton window, right? The already wide Overton window is being blown wider open every single day as more and more people get some sort of exposure to Bitcoin or exposure to Bitcoin through one of these vehicles, right? I think that's a good thing. I think it's a good thing because it decreases the probability that there will ever be a way for somebody like Elizabeth Warren, let's say, Bitcoin's biggest fan, to come out so negatively toward Bitcoin as she has in the past. Like as more and more people get this exposure to Bitcoin through through Bitcoin directly, spot, through Bitcoin ETFs, through Bitcoin treasury companies, through these dividend instruments, whatever it may be, as more and more people, as this becomes more commonplace, it becomes very unpalatable politically to try and come out against Bitcoin, right? You're coming for more and more people's bottom line. You're trying to hit them in their pocketbook when you're speaking out negatively against Bitcoin. So I think that it kind of changes that paradigm a little bit. It really removes a lot of the attack surface as Bitcoin just becomes something that, yeah, if you hold it or you hold an instrument that is built on top of it, just, it becomes so normalized, so integrated into the financial system that coming out against Bitcoin just becomes a ridiculous proposition, right? So I think that that's ultimately a really positive thing, a good thing. And personally, again, whether or not you want to get exposure to these types of products, whether or not you want to purchase these equities, I'm an MSTR shareholder. I own a little bit of Strive as well. Full disclosure there. I prefer spot Bitcoin, right? But I also I have a little bit of these, right? It's very small compared to what my Bitcoin exposure is, relatively speaking. But still, I think that these are ultimately very good for Bitcoin, right? And it's also a matter of the fact that you can try to say that, well, the suits are taking over Bitcoin, or Bitcoin, the institutions are here and now they're controlling Bitcoin. But the beauty of Bitcoin, the beauty of the game theory around Bitcoin, is that even when somebody like Strategy has a massive amount of coins, it doesn't give them control over the Bitcoin network, right? Now, in the case of a fork, sure, they have a lot of economic power that they could push in one direction or another to basically, move the price of whatever fork they want to sell and, do the inverse on whatever fork they decide to keep. But the great thing about Bitcoin's game theory and the brilliance of Satoshi, or perhaps it was just sheer dumb luck, but I think there was a lot of brilliance involved in thinking through the game theory of this, is that everyone who holds Bitcoin is incentivized to want Bitcoin to do well. Nobody wants to wreck their own bags. Nobody wants to do things that are going to be harmful to the asset, to the monetary technology, to the network that is buttering their bread. There's just no incentive to do that. There's no incentive to want to try and, even if you could, to try and change the rules of Bitcoin if you have a lot of Bitcoin, because by simply doing that, you're potentially going to be negatively impacting the fiat value of that Bitcoin as people start to worry, well, somebody's trying to change Bitcoin, right? This is the beauty of it, that as soon as you hold Bitcoin, you then go to work for Bitcoin. All of these companies, when you hold Bitcoin, all of these companies are in service of you. Jeff Booth has talked about this, right? That the beauty of Bitcoin and why, one of the reasons it is so amazing is because when you are a Bitcoin holder, everyone, whether it be Michael Saylor in strategy, whether it be Matt Cole in Strive, whether it be all of the developers, whether it be all of the companies that are building different things on Bitcoin, whether it be on the base layer, on different layers, twos and threes, whatever it may be, everybody is in service of you because everybody wants Bitcoin to succeed. Everybody who is working in and around Bitcoin. So that's a beautiful thing. Bitcoin may not have a marketing department. It doesn't have a foundation and a board like Ethereum and many other of these shit coins. But what Bitcoin does have is a decentralized and incredibly widespread, diverse, actually diverse, not like DEI diverse, but actually diverse group of people who all want to see Bitcoin succeed. And it's not just in America, it is all over the world. That is a really beautiful thing. And again, I think it's one of the things that just makes Bitcoin so powerful is that as soon as you own it, you are very much incentivized to protect Bitcoin, to protect the network, to not see it somehow be subverted. You want Bitcoin to succeed because Bitcoin succeeding means you are succeeding and you are getting wealthier, right? And let's be honest, everybody comes for the number go up, but a lot of people end up hanging around for the freedom go up. Come for the money, stay for the revolution, right? Speaking of something that's a little bit less revolutionary, but in comparison to Bitcoin, but still a bit of a thorn in the side of the traditional financial system, the Wall Street Journal just published a new article titled "Stablecoins Are Private Money. That's why they're a risk to the economy." And there is just so much wrong with that framing because every dollar sitting in your bank account is also private money. Your bank balance is effectively an IOU issued by a private corporation that can fail. And we watched exactly that happen in 2023 when Silicon Valley Bank, Signature Bank, and First Republic Bank all collapsed within weeks of each other. But the real irony, well, major regulated stablecoin issuers are required to publish reserve attestations showing holdings of cash and short-term U.S. treasuries. Your bank does not. And under the stablecoin legislation now moving through Washington, dollar-backed stablecoins are increasingly expected to be backed by highly liquid assets like U.S. treasuries and cash equivalents. But the bigger issue is not whether money is private. The bigger issue is whether money is centralized. That is exactly why economist Richard Werner's recent interview with Tucker Carlson is getting so much attention online.
We're heading towards digital control systems where we have no more control over our liquid assets. It will be, of course, programmable, permission-based. So only what the central planners allow you to use your money for at what time and place and location will be permitted. And if you're in the wrong place, it's not going to work. And if you're buying the wrong book title, it's not going to work, and so on. I mean, there's no limit to how much you can fine-tune and control. Oh, but they don't have so much power. They can't control, millions of people. Well, this is what the drive to build all these hundreds, in fact, thousands of data centers is about. It is an organizational challenge to micromanage the world's population through the new financial world order. Yes, but they're working on solving that. AI is really about that. If AI was about helping us to be more productive, the principle of decentralization would be applied, because any human organization and anything where humans are involved, if you introduce the principle of decentralization, subsidiarity, it will be more productive.
Werner warned that centralized digital money systems could eventually allow governments and corporations to monitor, restrict, and control economic activity at massive scale. And whether it is a bank account, a stablecoin issuer, or a future CBDC, centrally issued money can always be controlled. Transactions can be monitored, funds can be frozen, access can be denied. Bitcoin changes that equation entirely. No issuer, no central authority, no off switch. In a world increasingly moving toward digital money and centralized digital control, that difference matters now more than ever. We're going to go ahead and hit a quick break here, guys. And in just a moment, we're going to be back with Zach Cohen from the Bitcoin Policy Institute, a huge part of the recent Clarity Act legislation that's right now working its way through the halls of Congress, is based around stablecoin issuance, the ability to offer yield on stablecoin products, a lot of the back and forth and horse trading that happened there with regard to the big banks. But there are a number of other issues that bear investigation. One of them being the portions of the BRCA, the Blockchain Regulatory Certainty Act, that were added into the Clarity Act that offer developer protections for open source non-custodial software developers who are building in and around Bitcoin, much like the Samurai Wallet developers building Kione, who are currently in federal prison. And they are not the only ones, right? So excited to get an update from Zach here on that, but we are going to go to a quick break first. So stay tuned. Don't touch that dial. We'll be right back here on RoxomTV with more.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
How about stretch preferred stock on Roxom? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxom gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxom to your clients. Corporate traders, asset managers, old, young, Stretch on Roxom is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
11.5. We are in heaven at 11.5. 11.5%. 11.5%.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5. Get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to RoxomTV. A bill recently hit the House floor that would lock the United States into buying Bitcoin for the next 5 years. The American Reserve Modernization Act, or ARMA, comes from Alaskan Congressman Nick Begich. And here's what it does. ARMA authorizes the U.S. Treasury to acquire up to 200,000 Bitcoin per year over 5 years with a target reserve of 1 million BTC. It builds on the original Bitcoin Act that Begich introduced alongside Senator Cynthia Lummis, and it would codify President Trump's March 2025 executive order creating a strategic Bitcoin reserve into permanent law. More than 20 congressmen have already announced support. The bill classifies Bitcoin as a Tier 1 strategic reserve asset, putting it on the same footing as gold. It also ends the practice of auctioning off seized Bitcoin. Going forward, government-held BTC would be transferred directly into the reserve and consolidated onto a single audited ledger. The funding mechanism is where things get clever. ARMA proposes what it calls budget neutral Bitcoin accumulation by revaluing Federal Reserve gold certificates that are still priced at $42.22 per ounce, a statutory price set back in 1973. The accounting adjustment alone could unlock hundreds of billions in paper gains with no new taxpayer debt. The bill also establishes federal custody standards, geographically distributed air gap storage, multi signature governance, investment into quantum resistant cryptography, and once Bitcoin enters the reserve, it cannot be sold for at least 20 years. Representative Mike Rulli backed the bill on X, writing, quote, "There will only ever be 21 million Bitcoin. While governments can print unlimited amounts of money, Bitcoin's supply is permanently fixed." Representative Pat Harrigan added that the U.S. government already holds billions in seized Bitcoin, quote, "with no coherent strategy for managing it, and that needs to change." I'd like to go ahead and bring up Zach Cohen from the Bitcoin Policy Institute to the stage. Zach, how you doing? Is this ARMA bill actually gonna make its way into law? What's your read on the ground in DC?
Well, good to see you, Walker. I've been following along with your play structure build and would love to hear more at a later time, but it's been fun to watch. So just wanted to throw that out there. On ARMA, more on the subject here. Look, I think it's been pretty obvious in Washington, D.C. that the appetite for a strategic Bitcoin reserve is pretty low among other priorities right now, right? We've had the Clarity Act, which has been our favorite thing to talk about over the past, couple months here. We had the Genius Act before that. Look, I think if clarity gets through, which I think we're all hoping it will now and are feeling better about, and we'll talk more about that later, the appetite for something like this is going to go way up. And Nick Begich, congressman out of Alaska, is an absolute Bitcoin champion. He really knows his stuff. He's totally on the same page as us. Great staff. And this bill is great. I mean, it's very, very similar to the Bitcoin Act, which was originally introduced by Senator Lummis, who unfortunately will be leaving us, pretty shortly here. But the idea here is to give some new legs to this bill, and I think the thing that's most notable here is that there was a Democrat co-signer on this, right? This is something that we've been worried about for quite a while, is whether Bitcoin becomes a partisan issue, whether it becomes GOP coin or Trump coin or whatever we want to call it. This is a single sign, and we hope to see more signs that this will be a bipartisan issue. We had a lot of these representatives who supported the bill coming out and saying, look, we're 38, $39 trillion in debt. How are we going to dig ourselves out? And a strategic Bitcoin reserve, from our view, is one of the best ways to do that among a host of other benefits. So good to see this reintroduced. I certainly don't think we're going to see any movement on it in the immediate term. We're really in the sort of coalition building phase here. And to see now, I believe, over 20 co-sponsors on this bill already, it is a strong sign, and we hope to see more Democrats as well.
Definitely a strong sign. And I'm curious, you mentioned the national debt side of things. Am I remembering correctly that the one ability, or at least in Senator Cynthia Lummis's original proposed Bitcoin Act, the idea would be you got to hold the Bitcoin for 20 years, and then the only way that you can dispose of any of the Bitcoin is if it's used to pay down the national debt. Was that still kept in this draft of the ARMA bill as well?
So I don't know. My presumption is yes. I think again the idea with this bill was to update a few small details, and don't know those details off the top of my head, but really just to add sort of new life to this bill, right? To take the Bitcoin Act, which was sort of the initially like very much in the spotlight, right? Thinking about the Trump executive order, and sort of adding a new life to this now that it's gotten kind of kicked to the curb. The key detail here, Walker, that I am remembering off the top of my head now is one of the major issues with the executive order that we've been hearing about from the White House is that they don't know like what legal framework to use to custody the Bitcoin, right? They're saying, oh, should this be with the Commerce Department? Should this be with the Treasury Department? And what this bill does is says, look, there's going to be an office within the Treasury Department that's going to be in charge of both purchasing and custodying the Bitcoin for America's strategic Bitcoin reserve. And that is really a key detail that, I think is going to be, important as we're thinking about how to actually execute the strategic Bitcoin reserve. Because for folks who don't remember, we do still have an executive order that says, we will custody whatever Bitcoin the United States already owns, and we have the option value of adding to that at any time. The thing that's, again, I think really holding this back is how do we implement this thing? And to get the statutory language in there that says, hey, this is going to be the Treasury Department who's in charge of this, that's going to help, I think, accelerate the timeline here.
I will be very interested to see how much deep bipartisan support there may or may not be for something like this. Now, you and I would look at this and say, well, there's no reason anyone on either side of the aisle would be against this.
Yeah.
But we know that obviously, I mean, do you think that this is just the idea of the strategic Bitcoin reserve in the eyes of some Democrats may be a little bit, quote, tainted by Trump because he issued the executive order? Like, how do you even get around that from just a perception standpoint? It doesn't, doesn't mean it's the reality, but it is certainly the perception. I think it's fair to say from a lot of the, the folks on the Democratic side of the aisle that like, look, anything associated with Bitcoin or crypto or this executive order, that's tainted with Trump. So we can't give him a win, right? Are you guys worried about that at all? And how do you combat that?
Yeah. I think there's a couple of vectors to look at this with, right? There's like the pure sort of policy side of this, which is, Bitcoin itself is a apolitical sort of neutral technology or apartisan or bipartisan, right? It's definitely political and that's worth underscoring, but it doesn't pick a party, right? And from a purely policy perspective, the American Reserve Modernization Act, ARMA, it is perfectly in line with that. It's, hey, this is a technology that's going to be of huge importance for both America and all of the world in the 21st century. And America should lead on that, right? We led on the internet. We led on, technology, Silicon Valley, all these things that really make America such a special place. We led on those things and we should lead on Bitcoin too, right? That's the policy side. Democrats, behind closed doors, I'm sure, some of them feel that way and see the issue that way, right? Then there's the political angle, which is, there's two parties in Washington, D.C. that are, two primary parties, and they move together, right? Because in the Senate, for example, it takes 60 votes to clear something, right? For it to pass through the Senate, it takes 60 votes. And so that basically requires every single person from one party plus, some amount from the other party to get on board with something. And so they move together. And so, when you have Democrats saying, hey, look, this this crypto issue, right, that the Trump family is intimately involved in, and that we maybe don't understand the differences between Bitcoin and whatever else, we can't be seen supporting this because this is a bad look or we don't believe in this, right? Like they might have very good reasons for thinking those things, and I might agree with them on some of the more ethical questions here, but they move together, and so anything with even the appearance of being related to that is sort of in danger here. And so again, like to see a Democrat sign on to this bill, co-sponsor it, from the get-go is a pretty strong sign. Like that tells me that this Democrat is thinking very much about the policy issue. And then Walker, the third angle here, which could be an alternate explanation for why we have a Democrat co-sign here, is there's news circulating now that Coinbase and other crypto giants are building a war chest for the midterms. They're looking and saying, hey, these midterms, they're not looking very good. Like we think this is going to go Democrat, and that's going to be really, really bad for our industry. Particularly if clarity doesn't get over the finish line in time. And so that is another sort of major component here, right? We just saw Thomas Massie get primaried in Kentucky, right? Like that is certainly on the minds of almost everybody in Congress, regardless of what party they're in. And so as we're thinking about these issues, and ARMA is maybe a little bit separate from the Clarity or Genius Act style bills. Folks in Congress are thinking, how do I make sure that I make it through the primaries? And when Coinbase is on Fox News saying, "Hey, we're building a war chest to make sure Congress is pro crypto," that sends a pretty strong signal.
Yeah, I mean, they really do start to pay attention once they realize there might be campaign contributions flowing in directions they
That's
don't
for
like.
sure.
Right? That
Yeah.
nothing perks up their ears like
Yeah.
finding out they may be getting primaried. But I appreciate that breakdown, and maybe another. This is kind of a good opportunity for us to dig into Clarity a little bit because you brought that up. Could you give us sort of the lay of the land right now as far as where we're at right now and sort of what the timeline is looking like on this? Because I've seen some conflicting reports on when this actually might move forward.
Yeah. So since we last talked, the Clarity Act passed through the Senate Banking Committee, which is, sort of blocker number one in the Senate is, can we get it through this committee? Our friend Elizabeth Warren is on that committee, but our friend Cynthia Lummis is also on that committee. So, supporters and enemies on both sides there, and it did pass through there. And, for our purposes, Walker, right, we're really interested in the Blockchain Regulatory Certainty Act, the BRCA. And, there was concern that it was going to get sort of, chopped off at the knees in the banking committee. And our head of policy, Zach Shapiro, has publicly come out and said, hey, the language that made it through the Senate Banking Committee is very good. It's not perfect, right? We can't have everything we want. That's not the political game we're playing. But it is sufficient where prosecutions like Tornado Cash and Samurai Wallet would have a much more significant uphill battle with the language as written right now in the Clarity Act that passed through the Senate Banking Committee. So big win there. I think, we should celebrate that. At the same time, we should remain like extremely vigilant because the bill is not set in stone in any way now that it's to the Senate floor. And so, Kyle Olney from our team, who I know has been on this show, on multiple occasions, is very, very concerned that whatever language we have right now could be very much in danger, right? We've sort of been hearing rumblings that, people, and particularly senators, are sort of coming after the BRCA, that there will be some sort of negotiation that happens before it actually reaches a vote, and that the BRCA might very much be on the chopping block. And so, the call to call your senator, email your senator, get in contact with your senator by any means, remains extremely important here, potentially even more important than before, right? I think we were lucky to get through the gate of the Senate Banking Committee. We need to remain vigilant. But, also celebrate the win that was making it through the Senate Banking Committee with really strong language. So, again, remaining vigilant here. To answer your question more directly, I think we probably have like 5 to 6 weeks of, kind of deliberation, kind of back and forth before this really comes to a head. And I do expect that they'll vote on this before the summer recess, which is, kind of July, early July, like late June, early July. Or sorry, excuse me, mid-July, I think is when the recess begins. So, timing is really important right now. We're probably in the home stretch, and if this doesn't get through prior to that recess, I think the odds go down pretty significantly.
Okay. Oh, I appreciate that breakdown. I do want to touch on one piece, regarding the BRCA. That's what you guys have been beating the drum on. You mentioned Zach, Kyle. I just had him on the show as well, either last week or the week before.
Yeah.
Talking about this. And there was, I was seeing some conflicting reports about certain sections of that because there was something else added in there, kind of added on top of the original language, right? That basically made this statement, and I'm paraphrasing here, but the effect was, if you're a developer who knows that whatever your software is being used by someone for nefarious purposes, then you can be held liable. And again, paraphrasing, not the exact, that's not verbatim, but that was kind of the gist of it. I know Zach, I saw his post about this he's saying, and he's a lawyer, obviously, like he knows his stuff.
Yeah.
Very obviously. He's saying, look, I don't think this is that big of a deal, What Kyle told me that was pretty troubling was that language, though, was actually put in there kind of at the behest of some of the state's attorneys general. And so that was what was a bit concerning to me, because it's a question of, okay, well, if they're the ones who want that language put in there,
yeah,
doesn't that kind of mean that they're putting in a little loophole for themselves to be able to screw people over? Because then it's a question of, well, what constitutes knowledge of someone using it for nefarious purposes? Does what happened with the where, okay, anyone can use any technology, right? If it's open source tech, like that's kind of the whole thing. Yeah, North Korea could use it. Just because, like, so does that give them the justification to say, well, you knew this was being used by criminals because of course criminals can use it. Everyone knows that. So therefore,
right.
we can hold you liable. That was what was a little bit troublesome to me. I don't know if anyone at BPI has done some additional analysis on this or anything like that, but where does kind of what's BPI's perspective on that language as it stands now? Is it a house divided a little bit in terms of whether it's okay or not, or has there been some more clarity, pun intended, on that since the language was initially put forward?
Yeah, good question. And I'm probably significantly less qualified than either of the two to really weigh in here, but I'm happy to give you my thoughts, which is, you know, part of the game here is, again, this political game of, there's constituencies on both sides of this issue, which is, there's us Bitcoiners and us sort of like, freedom loving Americans who think that this, issue is pretty obvious and easy to deal with. There's the people on the opposite who are, really, again, that kind of law enforcement constituency who are saying, we we see this issue as also pretty clear cut, and crypto bad, crypto is used by criminals only. Anything that stops us or slows us down from going after people who are using crypto for nefarious reasons is an attack or a threat. And we're going to fight vigorously on the other side of this, right? And we see the issue our way, they see it their way. We think we're right, they think they're right. And so we're just playing this kind of like negotiating game. And the hope is that the sort of policy issue, right? Like the bare bones, fact of the matter being that, Keone and Bill did not move funds or transmit funds on behalf of any terrorists or criminals, right? Like that is at the base level of this policy question. And again, going back to what Zach said, like as written, it would be very challenging for a federal prosecutor to convict Bill, Keone, Roman, any of them on the charges that they were convicted of, which again were not conspiracy uh, to launder money, but failure to register as a money service business, right? And that's really like the issue that we're trying to deal with here. And so there's some balance in the middle, between the Kyle and Zach view of, hey, this is like terrible, right? This is like exactly what the federal prosecutors wanted, and they're going to keep prosecuting. And Zach's view of, there's probably nothing we're going to do to stop the federal prosecutors from coming after us, but how do we build in some sort of statutory language that makes the prosecution itself much more difficult, right? Where a jury instruction where they're saying, how do we, if we were to convict some Bitcoin developer or, non-custodial software developer or any kind of developer of failing to register as a money service business, what is the specific threshold that they need to cross in order for us to convict them? And, my view is that if someone is building a tool and they build the tool and they're sort of like ignorant of the fact that a criminal is using their tool, like they should not be going to jail for that seems very obvious to me. At the same time, it's like, hey, if you're and this might not be quite as popular of an opinion, but like, hey, if you're building a tool and you knowingly sort of like assist a criminal or a terrorist organization, like law enforcement should have some kind of recourse there. And so there's this really like challenging line that we're trying to thread where, you and I understand perfectly how this technology works, and that Bill and Keone were not facilitating North Korean funds, by any knowledge of their own. But at the same time, someone could be using one of these tools to do that and helping someone. And so again, how do we kind of get this right? And so the pragmatist in me says, the Zach Shapiro view of, hey, we got this language like super dialed in. This is what we need for when, a jury is deliberating on whether, the next developer is going to be thrown in jail. Versus like, hey, we want this to look exactly this way. And, you know, we we're sort of like willing to throw it out altogether if we don't get it that way. So some balance to be had here. But I think, if we get what we have right now through, my view is that's just a major win.
Well, that is the interesting point. It's like, even with this addition of this other language, is this still a net positive? Is this still a step in the right direction to at least still have the other portion of the BRCA in there? The portion that does make it very clear, like, look, you're not going to be prosecuted just because you're developing non-custodial open source software.
Yeah.
Okay, because it does seem to me that this additional provision, this additional clause, whatever it was that was added in there, that's basically just how things are working already right now.
Exactly.
Is that fair to say? Like, that's,
yep.
I mean, they're already doing that. That's not really a change. Yeah, it's added in there as part of this as sort of a caveat, but it's like, okay, if you scrapped all of this, then you still have that part because that's just still how the law is prosecuted today. At least with this BRCA portion kept in there, you do have some new developer protections. Defense lawyers are going to have some new grounds to stand on to say, look, because of these provisions put forth in the Clarity Act for developer protections, my client is in fact, is innocent, right? This
yep.
is, this is a frivolous trial, et cetera. Is that kind of the idea that, like, look, this is still better than nothing, and it's certainly better than the status quo as it exists today?
Yeah, I mean, that's for sure, right? Like what they're working with today is FinCEN guidance where like it's not sort of obvious like what exactly the rule is, right? Maybe it should have been, right? That's probably another question to debate and we had like pretty clear declarations of what was intended. But again, that is guidance, it's not law. And so that sort of muddies the water. So I think you're right? This is a win over the status quo. And I think, some people are going to celebrate that. And I think, people like Kyle on our team, who's fantastic, is also looking at that and saying, hey, this is our big opportunity to like really get this right. And we should push back and get exactly what we want. And so, I don't know what the right answer is here. Those two guys are in DC and working on the policy of it. But, it's important to think about both perspectives of, hey, this is a big win over, status quo. And when are we going to get a chance to do this properly ever again, or in the next 5 to 10 years? Let's make every effort to get this, sort of done as effectively and thoroughly and safely as possible. So again, like, I'm not sure I have a view between one or the other, but that's sort of like what's being debated right now.
It's made me think of that meme. It's like, inside of you are two wolves, like one of them's
right.
Kyle and one of them's Zach. But both wolves just want open source Bitcoin developers not to be thrown in federal prison for writing code, right? And thrown with this,
exactly,
the frivolous, that's the part that still just really bothers me, is the whole idea. And when I first went deep in this case and talked to Keone before he went to prison, like, it just made my blood boil, because you realize that the prosecutors went to FinCEN. They went to the regulator in charge of deciding who's a money transmitter and who's an unlicensed money transmitter and who doesn't need a money transmitter license. And FinCEN said, nope, they're good. They're not a money transmitter. They don't custody funds. It's not like, JP Morgan Chase, for example, custodying Jeffrey Epstein's money and transferring it, right? They're not doing that. Just as a little example, a little aside. But then they went after him anyway. And then they withheld the fact that they talked to FinCEN. And there's just so many elements of that case, I think, that should enrage people. Like, it should really piss you off, because it's a perversion of justice. And what I keep coming back to, and the drum I keep beating, is it's like, if politicians, Trump or whomever, wants America to be the Bitcoin and crypto capital of the world, you can't do that when you're throwing open source, non-custodial developers in federal prison. Like, that's not going to work. Nobody is going to want to innovate and develop here. if there's a chance they're going to go to prison when they're never even touching customer funds. Like that's the crazy thing to me. And it just seems like it should be it seems like something that should just have immediate bipartisan support, right? But apparently, it's sticky, but it's going to be interesting. Do you think there's a pretty, like, I guess, not asking you to predict the future. I know you don't have a crystal ball. A lot can happen. Anything can happen in DC. Are you feeling pretty positive about the chances that this bill does move forward in its current form? Or is there a lot of, I know there's a lot of the stuff with the ethics side of things around the Trump family that seems unlikely that he might sign that into law if it made its way to his desk with that intact. Is that what you're flagging as kind of one of the big potential hiccups, or are there some other things too?
Yeah. I think the two things that are still being sorted out, with the notable exclusion of stablecoin yield, which I think is probably fully sorted at this point, is the BRCA and the Trump family ethics. Am I like hopeful that BRCA is going to get through intact? I don't know. Based on what I'm hearing from Kyle and Zach, like, seems like it's really on the chopping block here, and there's going to be a pretty big battle over it. On whether Trump will sign it, yeah, it definitely depends on what's in the ethics portion. At the same time, right, like, midterms is like the 8,000-pound gorilla, and Trump doesn't want to lose the House or the Senate, but I think the House is really more at risk. And so, like, failure to sign this particular piece of legislation would just be, I think, a huge blunder. And would really sort of disincentivize Fair Shake and Coinbase from really spending a lot of money in the midterms, because what they were funding in the last election cycle was principally the Clarity Act. And so failure to get that done, especially on the president's desk, that would just cause an absolute shitstorm. Like, I would kind of like to see, how that went down. Like, it would be kind of a good entertainment. But it would just be, I think the chances of that are very slim.
Yeah, it certainly would have a lot of entertainment value.
Yeah.
Right? And sometimes the most entertaining outcome is the most likely. It's going to be really fascinating to see what happens. And from everything Senator Tim Scott and many other of the senators have said just during that banking hearing, this has been a really, really difficult piece of legislation to get through. There's been a ton of work on this, like, even by Washington standards, right? There's been a lot of work on this. And it seems that everybody now is pretty motivated to get this thing to the finish line. I'm sure Senator Lummis is as well. Obviously, this is her final term. Boy, I'm gonna be sad to see her go. I will say that. I hope she's replaced with somebody who's more like herself and less like Elizabeth Warren. But I guess another question would be, moving forward here, after the Clarity Act, let's say this goes through. What do you think is the next big piece of what's the next big piece of legislation that you guys are focusing on from the BPI perspective? Is it ARMA? Is it something else? Are there other things coming down the pipe that people should be aware of? Kind of what's the lay of the land there?
Yeah, so the next thing is going to be the crypto tax bill, which would include, principally for Bitcoiners, would be the de minimis exemption and the double taxation for Bitcoin miners, right? So that's a pretty well documented issue, right? Bitcoin miners are getting taxed both when they mine the Bitcoin and then when they sell it. And that's, not how it works for other commodities. And so trying to get that sorted out would be great. And then the de minimis exemption, obviously, we've been talking about that for a while. So that's the next piece. And they're, the early draft, they're calling that the Parity Act. So we got parity and clarity now.
I love their naming.
They love their naming.
Yeah.
Yeah, which is hilarious. But the early drafts of those bill actually, they do not look good. They don't deal with either of the issues that Bitcoiners care about. And so, we're keeping an eye on that. We're monitoring the situation. I don't expect that it will sort of continue that way. I think we'll at least get, a good shake at, including some de minimis language and some double taxation language in that bill. But again, it's like really early days on that. Like, if you talk to Ken, who's our head of government affairs at BPI, he'll tell you like the appetite for talking about crypto, like the word crypto or digital assets, on Capitol Hill, like they'll come after you. Like they're just so tired of this. Because again, I think clarity has just been a major pain in the ass. It's just been like a real slog fest. And the idea of like going from that to a piece of tax legislation is probably not, not very attractive for the, the staffers dealing with digital asset portfolios. So again, that's piece number one. And then, I think ARMA is probably number two. And they might move sort of in parallel. It's possible that, if clarity gets through, that those two move, again, like together. But I definitely would expect to see parity before I would expect to see ARMA.
Okay, fair enough. I mean, I would too. That's the ARMA. It's such a bold, like it's such a bold proposal. It's like you're buying. The goal is like, okay, we're gonna buy 1 million Bitcoin over 5. Like that's just, it's insane. And one also has to wonder. Boy, I mean, it's gonna be wild to watch the market during that time. I'm not a huge, chart watcher, right? I mean, as much as the next Bitcoiner, right? We can't help ourselves. But that's going to be really interesting because it's basically going to be, it's going to be a public signal far in advance that like, look, the U.S. government might be legally obligated to start buying a massive amount of Bitcoin. Yeah. Like, what does that do to the market leading up to? I mean, it's gonna be crazy. I don't know. I'd be curious how long that takes to make its way through. I have to imagine just, even on the revaluing of the federal, of the gold to up to what the actual market rate is versus, the 40, whatever it is, $42.22 from 73. I have to imagine that'll face a lot of roadblocks and, as well, but boy, what a time to be alive, Zach. What a time to be alive.
What a time to be alive. Yeah. And look, I think the other thing of note about ARMA is like, the way this was introduced is, again, very similar to the program that was noted in the Bitcoin Act. But the way that DC also works is through compromises. And so, not saying this is going to happen and not saying that I want this to happen, but there's also a very real scenario where this bill sort of gets pared down, right? We say instead of buying 1 million Bitcoin, we're going to buy 200,000 Bitcoin or whatever it may be. And we're going to set the program up and then, maybe we'll go from there or something like that, right? So, yes, it's extremely ambitious. I'm sure there are also versions of this bill that would be, very bullish for the United States, for Bitcoiners, that don't look exactly like this, and that might be, more palatable. So, keep an eye on that as well.
Yeah. Well, I appreciate all the work you guys do to keep an eye and a finger on the pulse on all of this stuff. There's a lot of moving pieces. Boy, it's got to be pretty hot in the swamp right now. But I appreciate all the work that you do, Zach, and all the work the other folks at BPI do. You guys really you do incredible stuff over there. People should go check you guys out. Where can people find both you and BPI? And is there anything going on with BPI that outside of just all the usual nose to the grindstone stuff? Anything you want to share that people should be aware of? Upcoming events, things like that.
Yeah, I'm on Twitter. It's just Zach Cohen _. You can find our BPI website, btcpolicy.org. You can find, the things we've been writing about lately. We just published a great report from our head of research, Sam Lyman, who was formerly Secretary Bessent's speechwriter, about he was documenting basically Chinese influence in the anti-AI influence campaign here in the United States. So I'll keep this short, but there was a hearing a couple months ago with I think it was the China Select Committee or something in the House or the Senate, and 3 of the 4 panelists were from the CCP. Like they were just inside of the United States Congress testifying about AI. And so Sam basically went through this. He documented all these different connections between these Chinese billionaires and these 501c3 nonprofits, and mapped everything and said, hey, look, like we have this very significant press going on against AI data centers. We had the moratorium presented by Bernie Sanders and AOC. Here's where those ideas came from and who's funding all of that. So definitely go check that out. That's on the homepage of our website. And we've been getting some cool news coverage from that, including Mr. Wonderful from Shark Tank. Kevin O'Leary has been singing about that. But yeah, plenty of fun things to go look through, and you can reach out to us. I think all of our emails are available on the about page where we have our team members. So definitely reach out.
I'm gonna have to go check out that story. Yeah, that's fascinating and unsurprising. Also, it's
so unsurprising. It makes perfect sense.
God, it's just also frustrating too, because you see some of this, like these campaigns against AI data centers, and you're like, well, none of this makes any sense at all. Like, this is just like really lowbrow slop propaganda. It's slopaganda, right? It's not even good. Like, forget the AI slop. This is slopaganda. But I'm gonna have to check that out. People should definitely go to btcpolicy.org. Follow you, Zach. Follow BTC Policy on X as well. Zach, appreciate you sharing your time. Always great to have you here on RoxomTV. And until next time, looking forward to it. Thanks for sharing your time with us.
Appreciate it, Walker. And we'll have to talk about this AI stuff next week.
Yeah, most definitely. Most definitely. All right, guys, we're going to take a quick break, and then we'll be back here in just a moment with more on RoxomTV. So stay tuned. Don't touch that dial. We'll see you in just a moment.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to Roxom TV. Billionaire investor Mark Cuban says he sold off most of his Bitcoin because, in his words, Bitcoin has, quote, lost the plot. Let's take a look.
And this might get some people upset. I think Bitcoin has lost the plot. And when I started buying Bitcoin, and I've sold all of it, except not all of it, most of it, it was because when all the shit hit the fan, with the Iran war, and Bitcoin was always the best alternative to fiat currency losing its value. And I always thought it was a better version of gold than gold. Well, gold just blew up and went, to $5,000. Bitcoin dropped. And every time the dollar dropped, Bitcoin should have gone up, because if it's priced in dollars, it was cheaper. So anybody from around the world could go pay in dollars, and it just didn't do that.
Not such a hedge.
No, it's not the hedge that I expected it to be. And that was really disappointing. And so I'd say I'm more disappointed in Bitcoin, not as disappointed in Ethereum, and the rest, the token stuff, the meme coins, garbage.
In the interview, Cuban's reasoning was that when tensions escalated during the recent Iran war, gold rallied while Bitcoin sold off, which he says undermined the whole digital gold thesis. And in the short term, that did happen, but this is exactly the kind of trader brain reaction that misses what's actually going on. Bitcoin was never built to outperform gold every time a headline goes sideways. It's a new monetary network competing against the entire global financial system. Adoption is still early, and the volatility comes with the territory. Selling Bitcoin because it dipped during a war scare is a little like selling internet stocks in '99 because the Wi-Fi cut out at your hotel. I'd like to now go ahead and bring in our next guest, Leah from Girl Gone Crypto. She's the marketing manager at Cake Wallet. Leah, welcome. Thanks for coming on the show.
Well, thanks so much for having me, Walker. Excited to be on.
Yeah, good to have you. So this is kind of interesting because also if we look back, depending on what timeline we look at for Cuban's comments here, Bitcoin actually from the start of the Iran war outperformed gold and basically other other major asset classes as well. Of course, leading up to that, gold had gone on an insane run. Bitcoin had been kind of languishing around, like that is all very true. But it seems here that, I mean, for a guy that is worth a heck of a lot of money, this seems to be such a short-sighted take. I mean, is Cuban does he just not really grok Bitcoin? I mean, you can be smart in some areas and not so smart in others. What's your read on this whole situation?
Yeah, I love what you said about comparing it to selling internet stocks because your Wi-Fi went out in your hotel. That's exactly how this reads to me. It's not just short-sighted, but it almost seems like he likes to dabble in the controversy. He likes to just kind of make a splash and do something that's a little egregious. And so it almost doesn't seem surprising to me that he's taking a more controversial or kind of a stand that will make a bigger splash just for the sake of it. Even to say like he's less, disappointed in Ethereum over Bitcoin. I'm like, we're all a lot more disappointed in Ethereum than Bitcoin. Like, what are you talking about, Cuban?
That was a weird comment to me. That was a weird because it's like Ethereum's been getting absolutely destroyed for years now, especially in Bitcoin denominated terms. So for him to say that, it's kind of like, oh, so you're just talking about your heavy bag. You've got a big heavy ETH bag that you want to get rid of. I see what's happening here. The whole merge, purge, ultrasound money narrative was a complete flop. And now you're trying to figure out how you get rid of this big heavy bag of Ethereum that's weighing you down. So you're going to say, yeah, I sold all my Bitcoin, or well, almost all my Bitcoin. Ethereum's like this. It's like we've seen this movie before, right? It's like I would not be surprised. I don't know about you, but I would not be surprised if he's got a big weighty bag of Ethereum that he is looking to part ways with, and I don't think anyone could blame him there.
Probably not, no.
Yeah.
Another thing I thought was interesting that he said was the whole, I thought Bitcoin was just a better version of gold. And obviously that's a long running conversation in the Bitcoin community. But I feel like as a conversational topic, like that hasn't really been the conversation for a while. So it's interesting. I mean, obviously it depends if you're viewing it as a store of value or whatnot. But again, this almost just feels like a very like flippant, he's just saying a couple of trendy things. I don't know. Like none of this feels very well thought through.
It is kind of funny. It's like, okay, if he was just making these comments in a vacuum, fine. But to make these comments on the heels of saying, I sold all my Bitcoin, well, almost all my Bitcoin, that was the interesting part to me, because it also feels like, boy, if you are parting ways with your Bitcoin right now, I just have to imagine that in 5 years, you're going to look back and say, oh my God, I should have been stacking so much harder versus, dumping it right now. Like you're dumping it at like a local bottom when you should be stacking hard. I mean, again, like he's got no money problems, right? That I'm aware of. Guy's doing just fine. He's been incredibly successful. So, you can't knock him on that side, but it is so funny. I mean, when I think this is the interesting thing, Leah, is that we see this time and time again. You saw this with, maybe even better examples like Charlie Munger, may he rest in peace, Warren Buffett, right? Larry Fink, before he came around to Bitcoin, as hard as someone could come around to it, a lot of extremely wealthy, extremely successful, let's say legacy fiat type guys really have trouble grokking Bitcoin. Whereas, sometimes the average, 80 IQ pleb gets it a lot quicker. I'm just curious if, we ever we ever reach the point, or when the point comes where it's impossible to make a statement like that. You couldn't make a statement like that because instead of having a lot of people still say, yeah, Cubans, the Cubster's right on this one, everybody just laughs you out of the room. Like, do you think we're still a ways off from that yet? Or are we getting close? Because it feels like this should be common knowledge at this point, but it's also hard to, or it's easy to forget that we do kind of exist inside a bit of a bubble here, right?
Absolutely. And I think that in terms of, I think the mainstream audience is more likely to listen to something that Mark Cuban is saying, like, oh, well, he's a smart guy. He's an investor, and be like, he must know what he's talking about. So I do still think we're a ways away from people just like necessarily like laughing him out of the room. But I do think in general, people understand Bitcoin and are familiar with it and understand its value proposition much better than they did even a few years ago. So even though in this last bull run, we saw way less retail activity versus potentially the bull run before that, or at least it felt that way. It felt like this last one was a lot more institutional. But I still think in general, even though maybe not as many people in the mainstream audience is actively talking about it, the understanding and the acceptance of it and not considering it money for criminals or whatever is we've come a long, long way in public perception, I think, too.
No, it's definitely true, and I am curious of your take. You mentioned, and this is something that I agree with you completely on it. This kind of absence or feeling of absence of retail in this last bull run, even just from like a social media perspective, right? Like I haven't been around like that crazy long, but this certainly felt different than 2021 from just like a mania standpoint. Like it never felt like we got to that like very manic, euphoric part. Even though Bitcoin went from 16K to 125 or 126K. That was by all, it was an epic run, right? But it just didn't have quite the same vibe to it. I'm curious if you think, this is something that I've heard a couple other people put forward as just a feeling about this, is that, okay, well, we did sort of have a euphoric mania, but it was actually in the Bitcoin treasury companies. It wasn't really in spot Bitcoin. It was just like a lot of that froth went into the treasury companies. A lot of the retail exposure, people were getting exposure to Bitcoin treasury companies instead of jumping into spot Bitcoin. Do you buy that, or do you think there was something else at play?
I'd say that it's a mix. Like from the Bitcoin perspective, like absolutely yes. I think that with the launch of the ETFs and people feeling like maybe safer to invest in that versus purchasing actual Bitcoin, I think that the traditional financial sector probably is more likely to jump on, like a BlackRock, like product. But in terms of like retail activity, it's interesting because I think that there was not very much of an alt season. And in the 21 run, there was all the NFT hype. There's all these things where I think a lot more everyday people were like, maybe I can get rich. And they didn't really understand the underlying technology or even the ethos or the, kind of mindset that a lot of us come from that came to the Bitcoin space and why we came here. And, for the fact of it being freedom money and, disconnected from the Fed and different governing, all of these things, right? And so I think that we saw a lot of the retail come for, I don't want to say the wrong reasons, but for this like kind of hope and this dream, where then they were kind of adjacently getting into Bitcoin, I think, because like, oh, well, that's the more stable, predictable thing. But I think that kind of alt hype maybe drew some of them in originally, and we didn't really, and then they came to Bitcoin, but we didn't have as much of that this last cycle. So that would be one potential thought there.
This is another sidebar, but I'm curious your thoughts. You've probably noticed many of the major crypto exchange casinos seem to have made the pivot to just real casino all around the same time. They all switched to really pumping their prediction market side of the house pretty much in lockstep, whether it was Coinbase, Gemini, Robinhood. I mean, I'm sure there were many others who did the same, but those are some of the big players, right, driving the most volume. I'm curious if you think that that's a bit of a, to me, this kind of signals like a bit of an admission from some of these companies that like, look, we know a bit of the altcoin, shitcoin, meme coin, whatever, 52 million pump.fun coins. Like we know this game is kind of up a little bit. So let's just give the people what they actually came to quote crypto for, which is just actual gambling. We'll dress it up as a prediction market, but 80% of the volume is just sports betting. Yes, prediction markets provide some really interesting insights, right, on certain things, but like most of it's just sports betting. Like that's what it is. I'm curious of your take on that, because that pivot seemed very intentional to me and very much like, look, hey, We know that people are just buying most of these, they're not buying these tokens for the innovation, right? They're not buying it because it's the new Bitcoin. They're buying it because they want to watch number go up and then they want to dump it. And if they're an insider, they want to make sure they dump those bags on retail. But I'm curious of your thoughts, if you think this is just them capturing the zeitgeist of the moment, or if there's more of an admission, at least behind closed doors, that the game has changed a little bit and it's like you may as well just cut out the crypto middleman and go to straight gambling.
Oh, that's such a fascinating observation. And I do think that you are right on the money about people are a little more honest maybe about why they're into certain coins at this point. There's a little bit less, like in it for the tech commentary happening, you look back at the 2017 run and like everyone had utility and all of these things and these big roadmaps and all these things. And how much of that actually happened? How many of those projects were still around? Very, very few. Where now I think that there is quite a bit more just transparency, that it is a little bit more of a hope and a dream gambling play. But obviously there are still projects with utility that are emerging. But and obviously, like, I am a big proponent of privacy coins, for example, and I think that serves a very good subset of the market and need within the market. So, but in general, some of these kind of broader things, I do think people are kind of being a little more honest about that now. But in terms of sports betting and gambling, that's so fascinating that you say that, because pretty much anyone that runs like kind of ads behind the scene, or different people that I've worked with that do like data analysis on like the general population that might be interested in crypto, they all say you got to target the sports betting crowd. And I'm like, that's so fascinating. So anyway, just kind of you might be onto something there.
It is interesting. I mean, and obviously there's been just a massive amount of volume going into the, whether or not it's like the Kalshis, right, that are just doing this, or it's the, but again, like Robinhood, Coinbase, Gemini, they all started pumping the prediction market side of the house, like at the exact same time. I have to imagine it's been profitable for them, but it's just seeing it almost felt like a bit of like a mask off moment, where it's like, instead of showing you the new coins that just got launched here at the top of the app, they're just showing you, hey, you want to bet on the Packers game tonight? It's just like, in many ways, it was at least very honest of them. They're like, here, look, we are, you've been calling us a crypto casino. You're right, but we'll just drop the crypto. We're just a casino, right? And if you want, we still sell Bitcoin, so you can get that too. It's fascinating to me. I do think these prediction markets, they obviously there's a lot of signal that can be gleaned from them. Like, you look at the fact that prediction markets basically called the last election before any of the pollsters did, right? Like, there is certainly great information. There's a lot of insider stuff going on there too. Obviously, you look at the people with like the perfect track records betting on Iran war escalations, and you're like, wow, how did you get all of like a 98% hit rate? That's amazing. You must be really smart. Not at all have insider information. But to me, this just also screams like this is what happens when the money breaks, right? When people feel like they can't get ahead, like, you can't blame them. This happens throughout all of history. Whenever money is breaking down, society starts to dysfunction. People start to look for ways to try and get ahead a little bit, to try and get off the hamster wheel, because whatever they're doing right now, when their money's losing purchasing power every day, they don't have a way to do that. So I guess I'm curious if you think, does this get a heck of a lot worse before it gets better? Or is there a chance of us making it out of this without a full-scale fiat collapse?
Oh, well, that's a very big question.
It
You're
is.
like, what is the meaning of life? Just kidding.
Are we all screwed,
I mean, I think this kind of that's a really good circle back to like Mark Cuban's commentary on like why he believes Bitcoin has lost the plot. I personally don't. Like, I would imagine you don't either, or most people listening to this, and obviously, like, I hope that we don't see a full fiat collapse just for the sake of chaos. And I know that a lot of people maybe in the slightly more anarchist side of the Bitcoin community might be like, burn it all down, let's restart. But, obviously there's a lot of other complications that come from that. But ultimately, I do hope that people continue to understand the importance of Bitcoin and the role that it plays in helping to really protect, like you said, their purchasing power and like long-term move towards a financial system that actually supports them better than our current, monetary systems do. And so, but we're still a long way away from that. Obviously, like, we're seeing increased adoption in terms of different, I think it was Bank of America or someone that's like, oh, you should have 4% of your money in crypto now, or, or Bitcoin now. And it is interesting. We're seeing more, financial advisors advising that, but they're still saying like 1%, 3%, 4%, you know what I mean? And it's this like, oh, in case it takes off, kind of vibe, right? And so I think we're still maybe a ways from people really like viewing this as a like kind of like a solid rock for which we would be able to lean on in the future. But I think we're continuing to head in that direction.
Okay, yeah, it's boy, what a time to be alive. I did want, we've got you for a little while longer. I did want to make sure we covered one more story here. So we'll switch gears a little bit here because a coalition of digital privacy advocates are funding a new anti-censorship technology. The group aims to raise $115,000 to support tools designed to keep online communications private and accessible, even in countries with heavy internet restrictions. Organizers say the funds will go toward open source software, secure communication tools, and privacy education initiatives. Cake Wallet is among the organizations backing the effort, helping to promote donations and privacy-focused infrastructure. Supporters say decentralized funding allows developers to continue building censorship-resistant platforms without relying on traditional financial systems. And this move also underscores how crypto broadly is increasingly being used beyond investing, serving as a financial tool for activism, digital rights, and internet freedom projects globally. So yeah, I'd love to bring you back in on this. Obviously, you are you work at K-Qual, you're the marketing manager there. Can you talk a little bit about this initiative?
Yeah, it's something we're so excited to be part of, really proud to be part of, actually. So, Tor, along with the Funding the Commons organization, have really brought this campaign to life. And so, the $115,000 that is looking to be raised is actually going to be matched. So, Cake Wallet is matching up to $50,000, and there's other partners within this that are matching as well, which is really great. Obviously, we've continued to see internet freedom decline. It's actually technically declined for 15 years consecutively. And you think about, what does that mean? Like, someone in, even like I've got friends in Canada, just right across the border here, that don't have access to certain pieces of news. And I asked them about it. They're like, I don't see anything. It says I can't see that piece of news. It's restricted. And then you think about going to China and all of the censorship and everything that's happening there. And so obviously, like, internet freedom and privacy and access to information is something that, we're really passionate about, of course. And so it's cool to get to partner with Tor and really help bring this to life. So basically, we have made it so that giving them the tools to be able to accept crypto donations. So it's going to benefit 10 different organizations that work in the kind of open source internet freedom space. And so, yeah, it's a really cool campaign. I would say the reception from and the involvement from the community has been just amazing to see how many people are showing up and saying, hey, this really matters. This is something that we want to support. And it's just kind of like a show of support for some of these projects that are just really, fighting the good fight out there. So yeah, it's been great to see the reception so far.
What types of projects is it like? Are you guys focusing on funding specifically, or the funding's going to organizations like OpenSats or others like that or HRF that are already kind of handle allocation? Is that how it works, or are you guys directly going to be handling the disbursements?
Yeah, so we're just kind of the tool that's helping to facilitate that. And so we're all completely non-custodial, so everything's just kind of running in that way. But the types of projects that it's projects that maybe are privacy tools, building anti-censorship tech, open internet infrastructure, things like that. And so yeah, there's 10 organizations total. I don't remember all of their names off the top of my head, but yeah, really kind of building in that sector. So.
I mean, it's more important now than ever, I think, to really that's the thing. Bitcoin is one side of this, right? And obviously, it already provides us with a censorship resistant way to exchange value. But this is why I'm so bullish on development around protocols like Nostr and all the things that are being built over there, because you need to be able to have anonymous and pseudonymous communication systems and on encrypted messaging and everything on top of this, because it's like encryption is an incredible tool, right? And it's something that we need to make sure we have as many tools at our disposal as possible, because again, yeah, the governments can use the same tools as well, but they do give the individual sort of an asymmetric defense, which I think is so important here. So yeah, very bullish on freedom tech developers, both those working on Bitcoin, but then in the, let's say, the broader freedom tech ecosystem. It's great to see. Will this all be, is it all catering towards like open source projects, I assume?
Yeah, so it's all catering, like you said, towards projects that are working in the freedom tech space. And so, yes, definitely.
Absolutely love to see it. Open source software is our greatest bulwark against totalitarianism. So fantastic. Love to see more money being funneled toward that kind of development. Yeah, it's been great talking to you. Really appreciate your time here. Where do you want to send folks, maybe if they want to find out more information about this particular initiative, or where they can find you as well and give you a follow? Really appreciate you sharing your time.
Sure. Well, thank you again, Walker. It's great to see you and great to hop on as always. Yeah, so you can check out Cake Wallet at Cake Wallet. And we've been posting about that initiative. Also, Tor is posting, it's at Tor Project is posting quite a bit about it. And then if you want to say hi to me, I'm girlgone_crypto. So I'm on Twitter there. So, or X, I should say.
Man, it's okay. I still say Twitter all the time too. It's old habits die hard, right? All right. Well, Leah, thank you so much for your time. Really appreciate it. Guys, we are going to let Leah go and we're going to take a quick commercial break here. And then when we come back, we've got a couple more guests ahead of us, more fun things to explore. So don't touch that dial. We will be right back here on RoxomTV.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Bitcoin! Come on, little buddy! Bitcoin! I need you! Don't go!
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
How about stretch preferred stock on Roxom? Receive 11.5% monthly cash dividends paid in Bitcoin.
11.5% paid in Bitcoin? How is that possible?
It's real. Stretch dividends on Roxom gives 11.5% monthly cash dividends paid in Bitcoin.
Dang! I want everyone pitching Roxom to your clients. Corporate traders, asset managers, old, young, Stretch on Roxom is for everyone.
Now that's a birthday gift. 11.5% in Bitcoin.
11.5. We are in heaven at 11.5. 11.5%. 11.5%.
Welcome back to RoxomTV. The price of Bitcoin is $75,992 infinitely printable Federal Reserve notes per coin. And a bill recently hit the House floor that would lock the United States into buying Bitcoin for the next 5 years. The American Reserve Modernization Act, or ARMA, comes from Alaska Congressman Nick Begich. Here's what it does. ARMA authorizes the U.S. Treasury to acquire up to 200,000 Bitcoin per year over 5 years, with a target reserve of 1 million BTC. It builds on the original Bitcoin Act that Begich introduced alongside Senator Cynthia Lummis, and it would codify President Trump's March 2025 executive order creating a strategic Bitcoin reserve into permanent law. More than 20 congressmen have already announced support. The bill classifies Bitcoin as a Tier 1 strategic asset, putting it on the same footing as gold. It also ends the practice of auctioning off seized Bitcoin. Going forward, government-held BTC would be transferred directly into the reserve and consolidated onto a single audited ledger. The funding mechanism is where things get clever, though. ARMA proposes what it calls budget-neutral Bitcoin accumulation by revaluing Federal Reserve gold certificates that are still priced at $42.22 per ounce, a statutory price set back in 1973. And what the fuck happened in 1971? That accounting adjustment alone could unlock hundreds of billions in paper gains with no new taxpayer debt. The bill also establishes federal custody standards, geographically distributed, air-gapped storage, multi-signature governance, investment into quantum-resistant cryptography, and once Bitcoin enters the reserve, it cannot be sold for at least 20 years. Talk about low time preference. Here to help me unpack all of this and more, Wendy O from Blockchain News. Welcome, Crypto Wendy. How are you doing today?
Awesome, Walker. Thank you so much for having me. It's been a minute, and I am the host of the O Show, everything crypto, every single day. And yes, Bitcoin too. We talk about Bitcoin a lot because it's important. It is the pillar for everything. But yeah, I'm excited to talk about this. I have a little bit of a spicy take on this particular type of Bitcoin strategic reserve.
Oh, okay. Well, let's get right into it. Let's hear it. What's give me the spice.
So I like this idea. I think that every single country should own a little bit of Bitcoin. Bitcoin is for everybody. It was created for the people, by the people. And unfortunately, even though it was created out of the 2008 housing crisis and, that terrible time, even the ivory towers are still allowed to participate because we're operating in this true decentralized economy, even the governments. But at the same time, the initial, when Trump did the first executive order about a Bitcoin strategic reserve, I was like, okay, I like this. Like, I don't want to use taxpayer dollars to purchase an asset. I like that we're going to use the confiscated Bitcoin and put that instead because it doesn't add any type of, it's really not up for debate because it's not to American taxpayers' money. Unfortunately, just the way that the economy is in America right now, it does make me a little bit nervous about us spending additional money without actually paying down the debt. However, I do understand that they do revalue the gold and they are able to hold on to that Bitcoin long term. And if there was some sort of promise, hey, we will use this percent of it to pay down some of the debt, or I would be okay with it in that sense. I'm just very concerned for our children's future that they're getting dealt this, like, we're millennials, we got dealt with a pretty wild hand, and it just continues to like snowball into this really big egregious mess that our kids are getting. And we can hold as much Bitcoin as we want for our kids, but does that really fix the predatory practices of the United States of American government?
No, it's a great point. And I do think, I know from the initial text of the Bitcoin Act, the predecessor to this, one thing that Senator Lummis, because I remember at the Bitcoin conference in Nashville, I believe was when she actually announced that bill was going to be, I believe it was in Nashville, it was going to be coming out. She talked about the fact that they would hold it for 20 years, and the only reason by which they could dispose, sell any of the Bitcoin would be to pay down the national debt. The idea being that, hey, if you're forced to wait 20 years, that Bitcoin, it's gonna be able to pay down quite a bit of national debt, right? Mm-hmm. So I need to get confirmation on whether that provision is still included in the ARMA Act. I believe it would be, since Congressman Begich worked with Senator Lummis on the initial Bitcoin Act as well. So I assume he kept that in there. But it is a great point, just in, we're both parents, right? And so I'm right there with you that, like, well, look, we just hit 39 trillion.
I think, sir, I think it's 40 trillion.
Is it? Geez, I blinked. And
what's another trillion between friends, right?
Well, that's the insane part, Wendy, is just how quickly this just snowballs, right? And at this point, the interest expense on our national debt is greater than our military budget, right? And like this is just, we spend a good amount on our military, right? But like we literally just spend more servicing our debt than we do on all of our incredible machines of war. Like that alone is mind-boggling. But I just don't know. Lynn Alden has the kind of nothing stops this train thesis, right? It's like you have fiscal dominance, you have all these entitlements, you have all these things that you have promised to pay. They can't not print money. Like they have, like that's the thing. And I have to wonder, is there any other way that we ever do pay down any of this national debt unless we employ some sort of long-term focused Bitcoin strategic reserve strategy like this? I just don't see any other way. Like, again, like nothing stops this train, right? Or is there another path that you see where we might suddenly just snap our fingers and get fiscally and monetarily responsible here?
No, we're not going to, because the people, all politicians for the most part, eventually, I mean, I feel like some of them, excuse me, I feel like some of them generally start off as like, hey, I want to save the world and I really want to do better. And then the ego and the money and the power, it just corrupts all of them, plus the pressure that they have to coordinate with other egregious actions. But one of the things that I do think about is if we do have to revalue the amount of gold from back in the 70s, then will we actually be able to get like a head count? How much gold do we have? Like, how much is it worth? Like, because if you're going to revalue it, don't you have to kind of account for that to an extent?
What happened to that Fort Knox audit, by the way? Remember we were promised that? That just kind of got like swept right under the rug. It was a big talking point for a while, and then it was like, you know what? Let's just ignore that. Kind of makes you wonder what.
That's because aliens.
Well,
aliens.
Right, aliens, yeah.
I think aliens.
Yeah.
And then what else? There was more aliens, and then I don't know. There's just a lot of alien talk happening right now.
It's like Epstein and Fort Knox come up, and all of a sudden it's like, guys, here's everything we know about extraterrestrials. Like, here it is. Just take it. This is all for you. It does make you wonder a little bit. It's like, boy, that you guys are being weirdly forthcoming with all this UAP stuff, aren't you? What are you trying to hide from us?
Yeah, and then I actually want to ask you something. Okay, because we talk about, money being printed into oblivion, turn it on, pump our bags. Okay, great, fine. But when we're talking about really kind of the future of America with this high amount of debt, because do you think that even buying Bitcoin would even be able to put a little dent in it? The way that we are accumulating debt in 2026, like really think about it. Like how much debt have we really, how much has our debt increased since the panorama?
Oh, it's nuts. I was looking at a video that Carl and I made back in 2023.
Love those, by the way.
Thank you. Just over 3 years ago, and we had the national debt up on as a screenshot of it as part of the video. Hilarious video, right? Naturally, but it was 31.5 trillion. at that time. And like that at that point, it was like, can you believe it? It hit 31.5 trillion. Now it's whatever, 39 it just hit, or 40 maybe it just hit. Like that's it's only been like 3 years. You're adding like an extra $3 trillion a year, and it's only going to accelerate. So to your question, okay, does Bitcoin even fix this? I don't know. Like the other thing is that, okay, I think it's important to point out that, yeah, the U.S. seems very fiscally irresponsible, but it's like if the people talk about the death of the dollar and whatnot, but it's like if the dollar, at least in my opinion, and I'd love to hear your thoughts on it, it's like if the dollar is dead, like let's say, dollar dies a death by fire, that probably means most other fiat currencies have also gone the same way first. Maybe I'm off base there, but it's like the dollar is the skinniest kid at fat camp, right? It's the prettiest horse at the glue factory. If it's failed, that probably means the other, all the other fiat currencies, like it's the best of the worst, right? But I'd love your take on that. Maybe I'm off base.
So America is a newer country, technically. If you look throughout history, people would use shells, whatever they would use for currency. I mean, we're supposed to be more civilized than we are from Rome and from, the different Middle Eastern, Asia, like all these different countries, right? But are we really? Are we really? Are we just more controlled? So one of the things that I think about too is like, maybe we won't necessarily see a destruction of America or a lot of these other countries, but what will end up happening is people just will continue to be so weak to even stand up or fight for themselves or speak out or, even just vote new people in. It's not like we can anymore because of all the fraud that's happening, which is why I'm a big proponent of voting on the blockchain, because we need some sort of transparency to an extent. But I think what's going to happen with our fiat currency is it's going to just, because like with Clarity, I know we're shifting a little bit, but to me, Clarity is kind of absorbing like pulling crypto into traditional finance to keep that barrier of entry of the accredited investor law, which in my personal opinion, America doesn't suffer from a lot of the social issues that people claim, but it's more so a wealth gap. And I feel like that's going to get completely absorbed. Fiat currency is going to go completely away. And that's how we're going to get our CBDC. Because back in 2020, was covering this a lot on my channel. I had a gentleman from different working groups over there, but they wanted to institute a CBDC to help send out the stimmies back then. And NIST has been studying Bitcoin since like way back when, but they wanted to do that. And they wanted to execute it at like post offices to help people or teach them how to use it there or whatnot. And I was like, well, why wouldn't you do it at pharmacies? There's more pharmacies in every city. Like, it's not that I support it. But I think that's what's going to end up happening with our money is we're not going to fall, but we are just going to be absorbed in this really insane society where it's UBI and AI taking over. And yeah.
So it's an interesting point. I didn't know that about the post office rollout of it. That's an interesting way to do it. At least weren't trying to do it at the DMV, because then it would be just even more of a headache. But that's a different story. It is interesting. I want to maybe go back a little bit to what you said about like Clarity, and I assume you mean like also stable coins and their treatment of stable coins within that being used to sort of implement a CBDC. I mean, It seems that at least America, as far as nation states go, has probably had the most allergic reaction to the idea of CBDCs. Like the BIS has been rolling out CBDC pilots, helping countries roll out these pilots. They've got them in like 120 different countries. Like they've been doing this for multiple years now. I'm tracking, like in the US, at least you have very vehement opposition to this idea of CBDCs. And people have thrown out the idea that, well, stable coins are just a backdoor CBDC. And I see that logic, like absolutely. But it's like, whereas like stablecoin usage is not highest, like US dollar denominated stablecoin usage isn't highest in America. It's highest in the global South, right? Like that's where people are using stablecoins because they don't have access to the banking system or their currency. Again, like, yeah, the US dollar sucks except for all the rest. Like, you compare the CFA franc to the US dollar and the US dollar looks like, a poster boy, right? Compared to Venezuela, compared to any number of countries, right? The US dollar is what people want there. But I am curious, like, to me, at least, it seems that there is more opposition to CBDCs in America, at least from some parts of the political class and from a lot of the citizens than there is elsewhere. Do you see that as well? Or are you saying that we're still just sleepwalking over here and as much as we think, like, where are you at with that?
It's a bit of both because let's face it, like in America, we have like people can say what they want to say about America. And, you know, I don't agree with everything this administration does. I don't agree with everything the previous administration has done. But I think that we can all come together, most civilized Americans that have part of a brain. We can say America is one of the most free countries in the world. Yes, there's still bad things that happen. But really, at the end of the day, if we look at how women are treated, if we look at how just people are treated in general, there's a lot more freedoms here, especially with freedom of speech. We do have constitutional rights to an extent. Obviously, if you're allowed enough voice and people don't like that, there's things that can happen. But if you look at some of the other countries like Venezuela or Cuba or whatnot, they can't,
or the UK
or the UK, can they go out and really say anything about it? Can you do that? No. No, I'm born and raised LA County. People are out, they're outside in the freeways protesting and all kinds of stuff, and it's okay. They're allowed to do it. There's no legal repercussions for that. So it's like, and I think that's what's happening. But at the same time, I feel like we're just becoming so lazy as a society. It's just going to end up getting passed. Like one of the things I like to do with my audience is I like to tell them to respectfully demand, like, hey, this is what I want to see in clarity. Or this is what I want to see in Bitcoin law. Or this is what I want to see done. Like write to your local public servants, write to Gavin Newsom, write to all of them and respectfully demand, because you are their employer. You're paying their taxpayer, or your taxpayer dollars are going to fund the salary. It is their job to advocate on your behalf. So I think that, I mean, I think we will see a little bit of pushback about it, but the fact that they had a CBDC provision in the housing, was it the Housing Act? It was on page 300 to 309, something, one of those. But why is a CBDC provision in a housing bill or a housing act? What does it have to do with each other?
They love to sneak that stuff in there, don't they? It's like they make it so purposefully, gigantic and bloated that it's like, well, we'll just slip this little thing in there and nobody's going to see it, right? I do have to ask you, this is a slight digression, but I can't help it. As somebody from California, from LA County, what do you think about Spencer Pratt? Does he have an actual chance?
I love him.
Incredible mimetic game. Like incredible.
The reason why I like it so much is this is the thing. I'm not saying he's a perfect person. Nobody's perfect. We all have, we've all got our flaws, and that's what makes us beautifully human. This is why we're not AI. Okay. But the thing with Spencer Pratt is that one of the things I appreciate the most about people, majority of people. But if you do something bad, like, or let's say just anybody that's just kind of like whatever. And if you go through a traumatic experience and you're able to turn your life around and you're able to use that anger and that energy to harness for good and to do the right thing, I have a lot of respect for you. Like this poor man's house burnt down. Like he's been a faithful husband to his wife. He's got 2 kids. Like, I don't care if it was Palisades or I don't care if it was Eaton. The thing is this poor man's house burned down. His family's house burned down. His neighbor's house is burnt down. And he's taking this trauma to try to do the right thing. To me, that is a wonderful example of a human being. Does he have to be perfect? No, but it's so much better than all the fraud and corruption that we see happen in California. And I've got stories because I work with a local nonprofit, the Self-Care Lab, that used to be out of Pomona, California, and they threw her out of her building during COVID, and no one at the city level wanted to help and wanted to do anything. It's all about inclusion, diversity. But then when somebody that's a diverse person needs help, it's like, what are we doing? Like we're whatever. So that was just like on a very low level. Like I saw a lot of the corruption and how that worked. I was sat in the meetings of, okay, like, how are we going to get a building, how they wanted to lease her a building and stuff like that. So there's just, but think of it this way, there's so many, they didn't want to give her a building, but there's so many other nonprofits that had buildings in the city of Pomona. It's just like, what are we doing? Like her facility is packed with like at least 100 kids daily at all hours. So it's like, what are we doing? But the amount of fraud that happens, and it's just refreshing to see somebody who's not a career politician step up and try to do the right thing. Again, I'm not saying I like everything he says or like everything he does, but it's like, at what point do we stop reelecting the same people with the same bad track records?
Yeah. And I think that's what it comes down to for so many people is you look at this and it's like you have the same politicians promising you they're going to fix things year after year after year, but they never actually fix it. It's like nobody's been stopping you. You've been in politics. You're a career politician. You've been in politics your whole life. Things have gotten worse underneath your leadership. How can you possibly look somebody in the eye and just lie straight to their face and say, oh, but we're going to fix it. But that upstart guy, the guy who's actually, experienced the effects of our bad policies, watch out for him. Like he's dangerous.
Yeah, he's terrible because he did something 30 years ago, and because he's wired or because he's MAGA. Like, it's like, you know what? I don't necessarily align with a lot of the liberal policies, but if I see a liberal politician say something right or do something right, I'm going to give them flowers. And the same thing on the Republican side, or super conservative side, I'm very much down the middle. And I think one of the things we've lost as a society is be able to come together, and even if it's somebody we don't necessarily like or vibe with, but come together and be like, I think this is really cool. You did that. Thank you. But one thing I will say is that I do know a couple candidates in California that they have talked about, they're like, I want to learn about crypto. I want to learn about blockchain. I'm blessed enough to get some of those that reach out every so often. But it would be nice to see, because I know a lot of the other states are starting to do their own Bitcoin strategic reserves, and they're starting to adopt Bitcoin in different ways. I would love to see those types of initiative happen in California too. Like, I think that would be absolutely amazing. But I think it's wonderful, like, because we're talking about a Bitcoin strategic reserve on the federal level, but on the state level too, have states be able to buy Bitcoin and say, hey, we want to fund this, so we're going to hold on for 20 years and we're going to build this community center, do something like that. I think it'd be awesome.
I think it is pretty amazing, actually, because states can move so much faster than the federal government, obviously. And you're absolutely right. We have seen this in multiple states, and even just like for state pension funds and things like that. I think the Wisconsin, if I'm not mistaken, the Wisconsin state pension fund was like the
or
first,
Wyoming, who knows?
It was one of the two that was, Wyoming. There was one of the first to implement this as, okay, we're going to take a position in alcohol. And I think they did it through the ETF, right? Which, like, fine, that's an easy way for them to get exposure, but it's still exposure. And I think that is a really powerful thing. It's also like the beauty of America, right? That, like, our federal government was never supposed to be this big. It was never supposed to be this big. It's our founding fathers are rolling over in their graves.
They were pirates. They were literal pirates.
Yeah. And it's like, now we've got this giant bloated, geriatric kleptocracy at the top. But at least states, this is one of the things I think is really important for folks to think about, is just like, you can actually have so much more impact at a local level or at a state level, but just like your community, like your local mayor, probably matters a heck of a lot more than, who's in the White House, honestly, like in terms of how it affects you on a daily basis. But we've gotten so conditioned to just the 24/7 hyper vigilant news cycles focused on the White House, whoever is in power, that I think it's honestly distracted us a little bit from like what actually matters, which is like the decentralized nature of America. Like, America it's a decentralized, these United States, right?
Yeah.
But like, it goes so much more down the local level. I'm curious if you think that we start to get back to that a little bit, that people start to turn a little bit more local, less of a national focus, or if the news cycle just has everyone too captured.
I don't think it's a news cycle. I think it's just a human condition. I have watched, I've lived a very interesting life, and I've had the pleasure of working around so many different demographics my whole entire life, especially when I worked in West Hollywood in healthcare, HIV, infectious disease. But one thing I've noted, and then like kind of pivoting to Bitcoin and crypto, but one of the things I've noticed is that we are able to evolve with tech and in that way, but we are not able to evolve emotions. Like human emotion is still the same. Like, we still act this, and if anything, we're starting to digress a little bit because critical thinking is not promoted anymore. Shame is not promoted anymore. Like, in my family growing up, Sicilian Italian, you do something bad, you're shamed. Like, your grandma's going to know, your aunt's going to know, your uncles, like, everybody's going to know, and there's shame. And I also think that has to do with the break of religion as well. It's like, we used to have shame. There used to be somebody to hold somebody accountable, but there's not anymore. And I would love to be optimistic and say, yes, this should happen. But at the same time, I'm just not seeing a change of behavior yet.
Yeah, it is true. It's, Sebastian Maniscalco?
No. I thought you were going to say Sebastian Bach.
No, him too, but comedian. I believe he's Sicilian as well, but he's got a great special. It's like, like, Aren't You Embarrassed? I think it's the one that went very viral. You should check it out.
Yeah.
I would recommend anyone listening right now, go check it out. It's he's a hilarious dude, but yeah, that's his whole thing. It's like, like, aren't you embarrassed? Like, don't you have any shame? Like, why hasn't anybody told you this? You should be embarrassed about this. Like, yeah, we need to bring back public shamings, perhaps, is the answer. Game of Thrones style, right? Just walking them through the street with a bell, just shame, shame, shame.
Well, but it's more so too. It's like, who's like, And the people shaming each other too. A lot of it is mindless. A lot of it has not backed by anything. It's not backed. Like I posted something on Threads and I was like, why does everybody hate Spencer Pratt? He's not a career politician. And I just got dragged. There was not one original thought. There was not, I don't like him because he did this. Or maybe there was about 5%. I'm not 5%, but there was no, I don't like my 9-year-old daughter can say, Mommy, I'm upset because I stubbed my toe and it hurts. Like something very, very simple like that. I'm sure your kid too. But it's like people are not, they're just like, you're this, you're that, but nobody can actually articulate why, even if it's 2 sentences.
It's a shame. I hope I think probably both of our kids are probably better at articulating things than most of the people we end up arguing with online. But yeah, that's the sad state of things. Wendy, I appreciate, I've got to read you out here, but I appreciate your time so much today. Thank you so much for coming on, sharing your time with us. Where can people go to follow you, find out more, and get more of your spicy takes?
I am on Facebook, Instagram, TikTok, YouTube, X, and you guys can find me. All the same handles are cryptowindio.com. And yes, Bitcoin, I'm heavy Bitcoin. Okay, you guys, I like to talk about all the different things because I like critical thinking. I like people to be forced to use their mind. Okay.
I won't hold it against you. Appreciate you coming on here, Wendy. Thanks for sharing your time. Great to have you on here. Hope we can have you back again soon. And guys, we're going to take a quick commercial break. And then when we come back, we will be here with Scott Melker, the Wolf of All Streets. So stay tuned. Do not touch that dial. We'll be right back here on RoxomTV with more.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV. The price of Bitcoin is 75,725 infinitely printable Federal Reserve notes per coin. And over the weekend, Strategy Chairman Michael Saylor hinted the company was preparing for another big move, posting on X, "This week we bought bonds, not Bitcoin. The BitVac is charging." Today, Strategy confirmed exactly what happened. Instead of buying more Bitcoin, the company announced it completed a massive $1.5 billion debt repurchase program, retiring convertible notes while maintaining its Bitcoin stack at a staggering 843,738 BTC. The company also reported a 13.3% BTC yield year to date, one of Strategy's key internal metrics measuring Bitcoin growth relative to shares outstanding. In other words, Strategy is strengthening the balance sheet while preparing for the next phase of accumulation. Meanwhile, rival Bitcoin treasury firm Strive Asset Management is accelerating aggressively. This morning, Strive CEO Matt Cole announced the company acquired another 1,109 Bitcoin for roughly $85.4 million at an average price of around $76,988 per coin. That pushes Strive's total holdings to 16,500 BTC. The company says its SATA vehicle has now achieved a 23.4% BTC yield year to date, and what it calls a 0.2% amplification ratio, essentially using capital market products to increase Bitcoin exposure faster than spot accumulation alone. And the market is noticing. Strategy's STRC and Strive's SATA products are both designed to attract fixed income capital into Bitcoin treasury strategies while trading near a $100 par value. Beginning June 16th, Strive says SATA will become the first U.S.-listed security ever to pay daily cash dividends, another attempt to pull traditional yield investors directly into Bitcoin exposure. Strategy still dominates globally with 843,738 BTC, wowza. But increasingly, the real story is no longer just who owns the most Bitcoin. It's who can build the most powerful capital machine to keep buying more. And here to talk with us about Bitcoin and those financial capital machines, we've got Scott Melker, host of the Daily Wolf, the Wolf of all streets. Scott, how are you doing? Welcome to the show. Thanks for joining us here on Roxom.
I'm doing great, man. Thank you for having me.
So I'm excited to pick your brain about this a little bit. We've seen now, obviously STRC has been blowing up in terms of just adoption of it. People, dumping money into it to get that sweet dividend yield, but also just the conversation around it. I mean, it's really kind of come front and center, it feels. I'm curious if you're reading on this because you've been reporting on this a lot. You've been covering this in depth. I think you talked with Michael actually about this after the conference. Can you sort of give us the lay of the land in terms of what your read is of this? Do we start to see more competitors emerge? Does Strategy and now Strive kind of have this part of the fixed income market cornered? What's your take on all this?
My initial thought is that they probably have it cornered, right? Because STRC is obviously the dominant product in the market. I'm not sure how much room there is for others on this very specific product. That doesn't mean the treasury companies won't find other novel ways to accumulate Bitcoin, but I think this specific kind of instrument, probably there's this much appetite and we're seeing who's willing to buy it. Like I think STRC probably is attracting more general retail flows because Saylor is a bigger character and they get the narrative. I think SATA, which by the way, I thought it was SATA for all these years until I talked to Matt, or all these months until I talked to Matt Cole and he kept pronouncing it SATA.
So I've been saying it wrong too. Okay.
I've been literally since the beginning of time. I think SATA is for the Bitcoin natives who understand STRC and trust the vehicle and are more interested in the higher yield in the product from Strive. So I think both of them are incredible. I've talked to Saylor multiple times about this. I interviewed him at Money 2020 in Vegas, which interestingly was a TradFi conference that neither of us would have normally attended, but STRC was relatively new, and he was really changing the narrative from Bitcoin buying machine to you can earn 11.5% passive yield, right? And he thought that was a narrative that the TradFi audience would really pick up on, and clearly he was right? Because that's happened. But I really think that as STRC has forced him to sort of change his narrative publicly and maybe dampen the Bitcoin maximalism that people believe he should be pounding the pavement with. But I think it's actually more about disclosures in the SEC and saying the things that he needs to say to keep these products popular. Because, I think people were just absolutely blown away in a negative way, obviously, when he said he was going to inoculate the market by testing Bitcoin sales. And we've seen sort of the same narrative from Fong Li, the CEO of Strategy. But everyone I've talked to, and I actually just randomly had Saylor the morning after that at Consensus. I look at my calendar, 8:30 a.m. I read the news. I'm like, oh, I'm talking to Michael, and he just announced that he would sell Bitcoin, right? And I asked him about it. And I think, behind closed doors, STRC is a security. The SEC, for better or for worse, and whether we love or hate them, their job literally is to protect retail and to oversee the regulation of securities. And when someone says we're offering an 11.5% yield that's safe for retirees, they're going to take that very seriously. And part of taking that seriously, they need to know that the Bitcoin that's quote unquote backing that product is up for grabs if the product loses par or if the dividend starts to slide, right? So the SEC takes it very seriously, the prospect of retail getting wrecked. And I really think that they have to say they would be willing to sell Bitcoin and probably test doing it just to show that that's a serious instrument that, is regulatorily in line.
Yeah, this was my read on this as well, is that Saylor is very much like he's a master of PR, right? And he's also, I think people sometimes forget, it's like, look, his responsibility is to his shareholders, right? Like he has a fiduciary duty to his shareholders. He does not have a fiduciary duty to Bitcoin plebs such as myself, unless we are shareholders, which I am. But again, people don't buy MSTR because they think that because you think you own Bitcoin, right? Also, I guarantee Saylor's not selling any of his personal stack, right? We know he has no reason to. There's no reason whatsoever for him to. But to me, this was him signaling that, like, look, okay, you're going to call STRC a Ponzi. You're going to say that we've got. What good is all of this, this Bitcoin if you're never going to sell it? Well, okay, so we'll just say we'll sell some, and maybe we have to. Like, to me, I don't think anybody can seriously look at this situation and say, 5 years from now, I think Strategy is going to have less Bitcoin than they do today. I just don't think that that's a reasonable position to take. I get why people were like mad about this, right? But to me, it's like he is just, what was the term he used? Inoculating the market, right? Like this just seems like a prudent decision for him as the chairman of a publicly traded company who is trying to offer novel financial products. That was my read, at least. It sounds like you're of the same opinion there. Like,
agree, and he
needed to do.
And the first thing he said to me was, "If I'm selling 2, I'm buying 10." He was like, hey, watch the end of the week, I'm a net buyer. Watch the end of the month, I'm a net buyer. I'm buying it, 100,000, 500,000, 1 million, 5 million, 16 million. I don't remember the exact numbers, but I think he went as high as 16 million. I think this has nothing to do with his unwavering faith in the asset. I think it has to do with market signaling.
Yeah, I'm curious too if you think. I mean, obviously, that the Saylor interview, I think a lot of us saw with Danny Knowles. Love Danny, love Saylor as well. But he was asked the question about, are these companies kind of competing with each other, right? Is this like, basically he's getting at the idea was like, is this a winner take all or a winner take most situation? I'm of the opinion that it kind of is. Like, it seems like there's not going to be, while I think one day, every company is going to have Bitcoin on its balance sheet because it'll be the prudent thing to do. It'll be obvious. Being able to compete as a Bitcoin treasury company, it seems to me that it's going to, be kind of a winner take most, but I'd be curious to hear your take on that.
So I was very, very unpopular in the Bitcoin community, as I have been many times over the years, because I walked into Bitcoin Vegas last year. I was pitched 7 treasury companies in the first hour I was there. This is when it was really, really heating up. 21 had just been announced. Nakamoto had just rebranded, and now was the whole conference, right? And everybody was pitching me these things, and every part of my spidey senses was tingling that this was going to be the bubble of the century. And I was saying it right in front of everyone's faces, like in interviews and very publicly on Twitter. And everybody told me that this was going to be the future of markets and whatever. And I think that, like, I'm wrong about a lot of things, but this one, I think I was generally vindicated. I said there's going to be Strategy and maybe 1 or 2 others, and everybody else is going to zero and will probably be acquired at, pennies on the dollar or pennies on the Bitcoin or sats on the Bitcoin, however we want to say it, down the road. So that part hasn't really happened, although I do think that is somewhat inevitable. Now, I think there's a lot of ways, as you said, to sort of skin the cat with Bitcoin treasury. I was always of the belief, even back then, I don't think you have to be a Bitcoin treasury company to have Bitcoin in your treasury, right? And you kind of alluded to that already. And from day one, I said, listen, these companies largely should behave like we do, right? Take your free cash flow, your savings, and because you believe that cash is trash and you'd rather be holding Bitcoin, you buy some Bitcoin with your earnings, but be a real company, earn money, save in Bitcoin, right? I don't see why it's any different for a government, an institution, or an individual on the way that we would approach this asset. So I agree with you. I think that it's going to be the prudent thing to do to just have Bitcoin on your balance sheet, but I think it will be from cash flow from your operating business and not necessarily from Bitcoin. The problem with Bitcoin treasury companies that I sort of felt from the very beginning is it requires some sort of wizardry or financial engineering. And we all have seen how the financial engineering story ends, right? And I didn't believe there was enough appetite in the market for 50 of these things, right? And I still don't. Maybe some of them will find other novel STRC type products, other kinds of bonds that, exist in legacy markets that haven't been replicated on the Bitcoin side and will succeed. But I think we're going to see, we've seen the purge, but I think that will likely continue. And I think it will be a winner. I think it was already winner take all for strategy, with a couple other smaller versions of that can succeed. And I think Strive has done an exceptional job over the past couple months of consolidating and basically just mimicking what's happening with STRC, but having a novel new approach, daily dividends. And also, I think it's notable, and Saylor'S sort of following, actually, in this case, that Strive paid off their convertible notes and paid off all of their debt and is debt-free, and basically is just saying, we're running this SATA machine. That's how we're buying Bitcoin. That's our entire business, right? We don't have STRD, STRK, STRC, they're doing one thing. And they're doing that one thing because they saw how successful Saylor was at doing that one thing, and were smart enough to cut all the excess and just do that. Saylor even said to me, and he said it in a number of interviews, I wish I'd come up with STRC first, right? But it was iterative. He tried all these different things, and he finally landed at the final boss, I think, in his opinion. But he had to sort of do all those, I won't even call them failed experiments. They're successful, just less successful. But to get to that premium product, he had to go through everything, and everyone else can just try to copy that. And I think Strive's done well there. So I think those two will be fine. I really don't yet have an opinion on 21 and what's happening with Tether and SoftBank being bought out, but there are a lot of big names supporting that. I would not imagine Tether will fail. The question is, will it be a Bitcoin treasury company that people will want to see? Bitcoiners may freak out about that. I'm not sure. But I think there will be 3 or 4, and everybody else will consolidate or get bought.
It does seem to be trending that way, right? And it's hard. At this point, I don't think anybody can possibly catch up to the sheer stack size of strategy. Like that's it's not going to happen, right? There's just no, they've already, like, most nation states won't be able to catch up to strategy. And that kind of makes you wonder, like, long term, boy, strategy sure seems like it will be, right now it's kind of still this like somewhat niche thing, right? Like it's, yeah, we're in our bubble, right? But you go out into the wider world, and I bet you'd, a lot of people have heard about Bitcoin now, but that number is smaller when you talk about, hey, what do you think about what Michael Saylor's doing with his, with STRC and MSTR? It's like, still, this isn't even on most people's radar, but it seems like it's going to be one of those things that's very obvious in retrospect, at least in my opinion.
It will become obvious in retrospect for 2 reasons. A, because it's a good product, and as Bitcoin, to your point, becomes more of a mainstream narrative, so will all of the products around it. It's just, I think, a part of the maturing of the entire space, and not just Bitcoin alone as an asset. But I think number 2 is a lot of people will back into it as they understand the insanity of what's coming with Fed policy and the Treasury and the runaway debt and all of those things, and seeing, how far they're lagging with their savings, and an 11.5% product will probably start to look a lot more attractive, even versus T-bills, if they actually end up coming down, right? Because if you believe that Kevin Warsh is going to cut rates, which we can have a whole conversation about, but if you believe that eventually we head back towards a ZERP type of environment, 11.5% every time the Fed cuts looks that much more attractive, right? And it also kind of reaches exit velocity after existing for a certain amount of time, right? People will not think STRC is a scam in a year or 2 years or 3 years because it will have history, right? Right now they can point it and call it a Ponzi, whatever, but things tend to, the longer they last, the longer they're going to last, right? So I think that those 2 forces probably will work massively in Saylor's favor with time. And listen, he's not an idiot. As you said, he's a great marketer. He's on every TV. He doesn't have to take the time to talk to all of us, right? He doesn't have to take the time to go on CNBC and Fox Business every day. He's doing it for a very good reason, because he's marketing a product, right? And that product used to be Bitcoin for the world. Now I think he's really moved on to, digital credit.
Yeah, the guy is certainly, he has some stamina when it comes to interviews. I will say that. It's but between Saylor and Lynn Alden, it's really quite, pretty darn impressive, the amount that they're able to still come up with new things to say. Honestly, that's the most remarkable part. It blows my mind. I wanted to. This actually brings us to our next story. You did bring up the Fed. You did bring up Warsh. For those that don't know, the Federal Reserve does have a new chair. Kevin Warsh is stepping into the role, and it's happening as inflation pressures are continuing to build across the U.S. economy. Warsh has previously called Bitcoin an important asset and, quote, a very good policeman for policy, arguing that its price reflects how much confidence the market actually has in the Fed's management of the dollar. Warsh has also opposed aggressive expansion of central bank digital currencies, marking another sharp break from the direction explored during the Powell years. And his first Fed meeting as chair is expected in June. Scott, I'd love to get your take on this because you did hint at this earlier about whether or not he's going to be a dovish or hawkish. What's your read on this? Because I've seen opinions all over the board. A lot of people convinced he's got no choice but to cut because that's what Trump is putting him in there to do. Other people saying like, look, he's been a policy hawk in the past. Like, other people saying, well, he's a balance sheet. He's an interest rate hawk, but he's a balance sheet dove. What's your read of all this? Where do you think he's going with it?
Well, he's there to do Trump's bidding. The question is Trump's bidding still to cut rates with the current data, right? So I don't know if things have changed, and the war certainly changed a lot of things. But I mean, let's think about what Kevin Warsh is walking into, right? So first of all, Kevin Warsh is personally worth $192 million. He's married to Estee Lauder's granddaughter, which she's worth $3 or $4 billion. I don't know what the prenup looks like, but he's a multi-billionaire who arguably is taking the worst job on planet Earth for no good reason. I can't understand any human being who could just exit stage left and live on a yacht taking a job where one side the data says he probably needs to hike or at least pause, and the other side where he's being called a sock puppet, literally, on the floor of Congress, and will have to do Trump's bidding and potentially blow inflation out completely the other side. I mean, you've seen how Trump treated Jerome Powell, for better or for worse. You can have your own take on that. But who would want that job, right? Like, what are the odds that you're remembered fondly for that? But, I don't know if people know Kevin Warsh's background. But, listen, the Fed, we go on a deep dive. I literally just posted one on Monday, and I did it on Yahoo on Friday on the Federal Reserve and how it was created. I don't think most people understand the Federal Reserve, but the Federal Reserve at the most basic level was created by bankers for bankers, and those very bankers regulate their own banks, right? So Kevin Warsh is of that system. He is a banker himself, but also I don't think most people realize that he sat on the Federal Reserve from 2006 to 2011. Kind of a relevant time in history if people remember what happened there. AIG was bailed out, and then the Fed and the Treasury, made everybody whole 100 cents on the dollar, even though they were literally willing to take less, so that Goldman got paid and everybody got paid. And Hank Paulson was there, and he was ex-Goldman CEO. He was the head of the Treasury. He was talking to Lloyd Blankfein, who was the CEO at the time at Goldman Sachs during the entire crisis over 20 times. And then they installed Edward Liddy as the head of AIG, who was one of the biggest shareholders and a board member of one Goldman Sachs, and who was sitting on the Fed board presiding over all this, the wonderkin 38-year-old youngest Fed governor ever, Kevin Warsh. So this is a guy of the system, of the bailouts, of the TARP, right? So like all the narratives you can put together of him being a balance sheet hawk and dovish, whatever. He's a banker who's going to do what's best for Wall Street while presiding over the Fed, right? Do I think that it's great that he understands Bitcoin? He has 30 crypto investments. It blew my mind when I dug into the investments that he had. I mean, things I've never even heard of. And I we do this every day, and there were things I literally never heard of that this guy is like degenning, almost at the like pump fund meme coin level. But so I think it's a benefit to have somebody there who actually understands the industry and believes in Bitcoin. But I'm not going to ever fool myself to believe that anyone becomes the head of the Fed unless they're doing it at the will of the banks and the administration, right? So it's just crazy. I think that he will do whatever he needs to be done to keep corporate profits high.
Yeah, and it's a very important piece of context. I mean, you mentioned a lot of them, but the other thing is, it's like we're heading into this is a midterm year, right? We know that historically, when the economy is perceived as not doing well during a midterm year, usually whatever the incumbent dominating party is does not fare very well, right? We know that Trump doesn't want to end up as a lame duck, right? And so it seems like there's a lot of impetus towards, hey, like, listen, Kevin, like I got you in there, like now you need to do something. And I know the Fed is separate, right? Like the Fed's separate, of course.
Yeah, right.
But
Independent.
But yes, yeah, but it's a public-private institution, whatever that means. But I'm curious too. I don't know if you saw this, but Warsh talked about changing the way that they look at inflation, changing it to this like mean trimmed PCE, basically, like which cuts out any volatility spikes. And if you go by that metric, we're actually only like 2.3% inflation. Is that just the game now? Is that it's going to be like, well, look, actually inflation's under control because we changed the metric again, and so thus we are able to juice the printer back up a little. Is that what you think he's kind of positioning for?
Yeah, I think that there's been a lot of times in history where they've changed the way that you measure inflation conveniently, right? My brain is not working right now. I was literally about to look it up, but in the 70s, famously, they just changed the way that CPI was calculated because they didn't like the inputs and how they were looking politically, right?
All the hedonic adjustments, right?
Yeah. So, I haven't believed government data in a very long time, not because I'm some like tinfoil hat conspiracy theorist, because like if you show me who you are, I believe you, right? And how many times have we seen the job numbers be wrong and then quietly revised? I mean, we literally had years of job numbers that the markets would react to every single month, and then at the end of the year they revise all of them away while you're not looking, right? So I don't, I think that all of these there are reasons to change how CPI is calculated. I mean, times change, right? We all scream that crypto shouldn't be regulated or legislated on based on the Howey test from the 1930s. Things do change. So, I'm cognizant of that, but generally they just change it to make the numbers look better. Does anybody on the ground feel like CPI is around 3% right now or 3.5%? I mean, price of coffee is up 105% in 5 years. Go down the list of everything you actually buy and actually want. It's up 40 or 50%. So we're being gaslit. And we know that. So I believe that they will create, they'll make the data work, and then they'll react to what they need to react to, keep us all happy, and bread lines and circuses, whatever, the old term. And listen, I really don't feel like I'm a wild conspiracy theorist. I don't. I think that they've just shown it so many times. It's so obvious. And to be honest, the whole Warsh is hawkish narrative, I believe, is exactly what they had to say to push him through and make him a palatable candidate to do what Trump wants him to do, right? I mean, you look at how the Fed was even created, right? When the Federal Reserve Act was being passed, all these guys went down to Jekyll Island, all the bankers, of course, like one Treasury guy, one senator, and JP Morgan, what's now Citibank, Kuhn and Loeb, all the big bankers. And they decided what the Fed was going to be, and they gaslit us by calling it the Federal Reserve, since we know that it's neither. And then they took 3 years to pass it, and all of them came out against the bill publicly, so that it would actually be voted on, and so that the Senate would vote on it and the people would accept it. They gaslit the world and pretended they were against the thing they needed to pass because they knew that's what would get it done. It's the same thing we see over and over again.
It is just kind of like, it is kind of ridiculous once you've looked into the history of the Federal Reserve and you just realize like, oh, this has all just been this basically exercise in gaslighting from the beginning, right? And even more so since 71, right? Even more so since we completely decoupled from any semblance of backing or any reality, right? We're divorced from it at this point. Speaking of divorced from reality, I do want to dig into this Mark Cuban story with you just to get, because I think it's it's a little bit of a digression here, but it's just such an interesting little cultural piece right now. So for those who are not aware, billionaire investor Mark Cuban said he sold off most of his Bitcoin because, in his words, Bitcoin has, quote, lost the plot. Let's go ahead and take a look and hear it from him.
And this might get some people upset. I think Bitcoin has lost the plot. And when I started buying Bitcoin, and I've sold all of it, except not all of it, most of it, it was because when all the shit hit the fan, with the Iran war, and Bitcoin was always the best alternative to fiat currency losing its value. And I always thought it was a better version of gold than gold. Well, gold just blew up and went, to $5,000. Bitcoin dropped. And every time the dollar dropped, Bitcoin should have gone up, because if it's priced in dollars, it was cheaper. So anybody from around the world could go pay in dollars, and it just didn't do that.
Not such a hedge.
No, it's not the hedge that I expected it to be. And that was really disappointing. And so I'd say I'm more disappointed in Bitcoin, not as disappointed in Ethereum. and the rest, the token stuff, the meme coins, garbage.
Okay, so Scott, I want to bring you back in here because this to me was interesting. A couple of points here. One, he says this was a really shocking one. Maybe we can start here. He says he's less disappointed in Ethereum, which just seems like a ridiculous statement to make, given how Ethereum has performed, not just recently, but like over the last couple of years versus Bitcoin. This just seems like kind of nuts. It just makes me think he has really heavy ETH bags that he's trying to dump. But I mean, Mark Cuban's obviously an insanely successful guy. He's not a dummy. Is this just posturing, or do you think he's for real? Or do you think it's just like, hey, yeah, you can be really smart, you can be really successful, you can still fail to grok Bitcoin? Like if you're looking at it from this really short-term lens, what's your take?
So many takes. First of all, it was Arthur Burns in the 1970s. It just came to me as we were saying, who changed CPI.
Okay.
Okay, so now I don't feel so stupid. I would have gotten that in my sleep at some point. There's so much to say about Mark Cuban. So first of all, take a look at what he said. Is just I actually like Mark Cuban. He's been helpful to me personally, but he's just wrong. I mean, he said that gold skyrocketed to $5,000 after the Iran war. Gold was $5,000 before the war and has actually underperformed almost everything since the war started. So if that's his basis, he's literally using the wrong facts. I mean, gold crashed since the Iran war. I believe it's still down 11 or 12% since the war started, and Bitcoin was up dramatically, right? At one point, I think 20% since the war started. So like if his gauge is how it's performed in a time of geopolitical conflict, Bitcoin has outperformed almost everything, or it had. I mean, stocks have continued to skyrocket, but the Bitcoin versus gold thing there, he's just wrong. So also, I think the notion that an asset could like lose the plot, I know that's not what he's saying, but it's just people that are buying and selling something. And I think at its core, the people who understand and deeply have conviction have not changed that conviction at all. So I don't believe that they've lost the plot in any way, shape, or form. The Ethereum Bitcoin part is really curious. So I think we can look back on Mark Cuban's history with crypto. I don't remember specifically, but he was very deeply down the NFT Web3 rabbit hole. He was going on all the kind of degen crypto podcasts. Everyone was cheering one of us, one of us. This is the guy who decided to accept Doge as payment at the Dallas Mavericks Stadium and for Dallas Mavericks gear, right? So I'm actually not criticizing him at all, but I would say that his like Bitcoin card for deeply understanding it has probably been pulled for 5 or 6 years. So him not getting it now is probably a function of him not ever having got it. So I'm not surprised. Now, the ETH thing, I mean, ETH has wildly underperformed. There's a massive brain drain at the Ethereum Foundation. People leaving the very notion that you need an Ethereum Foundation itself is probably problematic when you take a look at Ethereum. I do like, by the way, what Vitalik came out and said about it of late, which giving him some credit, totally different conversation. But there's just no metric by which I think you can look at Ethereum and say, wow, it's been great while Bitcoin's been bad, right? So like, I think that if you believe Bitcoin's a sinking ship, you have to believe that almost everything else in crypto is a more dramatically sinking ship. So I think he's just kind of wrong here, right? And like I said, I'm wrong all the time and people correct me and I move on. Maybe he'll do the same. I like him. I just think he got this wrong.
It is kind of mind blowing because that was the first thing that jumped out at me at that clip was when he's talking about, well, since the Iran war, like I thought Bitcoin was supposed to do well. It's like, well, Bitcoin's did very well since the start of the Iran war, right? Like it, didn't
did well very quickly when it started.
Very quickly,
So,
yeah. When gold did not, and so like to your point, it's like, well, if that actually is your case for why you were dumping your Bitcoin, like did nobody like think to correct you, or like did you talk to anyone about this, or just like. You were just maybe confused. Like, I don't know. He's clearly got a lot going on, right? He's got a lot of irons in the fire. I am curious what kind of size a guy like Cuban deals with when it comes to Bitcoin. Like is him dumping his Bitcoin like him dumping, 1 Bitcoin? Is it him dumping 10? Is it him dumping 100 or 1,000? I have no concept for how allocated he was. I mean, that's his business, not ours. But it is interesting because people do pay it. But the thing is, like, people pay attention to what somebody like Mark Cuban says, because it's like when Charlie Munger, rest in peace, or Warren Buffett would make comments about Bitcoin being rat poison or whatever, or Larry Fink, before he became a massive Bitcoin bull, he spoke very negatively about Bitcoin. Now he is, one of Bitcoin's best marketers out there, right? But people pay attention when guys like this talk. And it's sort of, I mean, I guess it's like we all get Bitcoin at the price we deserve. If you're only listening to one person for your, information, maybe you don't deserve it yet. But this brings me to kind of a larger question of like, how much, how far along in adoption are we actually? Like how far has the needle moved? Because sometimes it seems when we're inside our echo chamber, right, that okay, we see all the Bitcoin treasury stuff happening. We see all the legislation moving through Washington, right? We can talk about the ARMA Act later as well. We see all these things happening and we think like, well, come on, everybody's got to get it now, right? But it's still a vanishingly small group of people who grok Bitcoin, right? I mean, how far along do you think we actually are? I guess better question put simply, are we still early?
It depends on through which lens you look at it. So I think Bitcoin is really far along for adoption as a financial asset. But I think people who understand Bitcoin view it as money and not as a financial asset. And I think very few people have understood its real purpose and importance. So I think you see it on every ticker now, right? If you turn on Fox Business or CNBC, there's Bitcoin right next to NVIDIA or the S&P or gold or any other asset. So I think that it's been accepted by Wall Street as something that you can put into your portfolio. But nobody who deeply understands Bitcoin ever viewed it as a percentage of their portfolio, right? You viewed it as the money, your savings account. We can go through all the reasons. Everybody who's listening understands Bitcoin probably deeply, so we don't need to give them that. And so I think as far as it becoming a part of portfolios, it's come very, very far. I think anyone who wants access to Bitcoin at this point probably has it, which was unimaginable really during the Gensler Biden era, right? So that's happened extremely fast. To credit them, the ETFs did happen during their era. So I think if we're viewing those as a positive, Bitcoin has become investable for almost every kind of money, right? Saylor's been very responsible for creating a lot of the products that allowed new money that probably couldn't buy spot Bitcoin to enter. But yeah, I think that we're in the first inning for people viewing Bitcoin for what it really is.
I'm with you on that. And just in terms of kind of the viewing it for what it really is, you put out a really great video. I think it was like eight or 9 minutes maybe. It was a really good breakdown of just like why Bitcoin for you. And I think it was a great reminder. You got a ton of great just comments and feedback on that, I think, and rightly so, because I think it was a great reminder. Sometimes we are very much sometimes in an echo chamber where we forget, like we can talk about the news. You said this in the video, like we can talk about the news, we can do all these things, but like sometimes people do need a reminder why. They need a reminder like why this is actually so important. And one of the lines that I really loved from that video, you said, when it comes to money printing, there is no opposition party. On monetary policy, there's just the uniparty. And I thought that was great. I've got a little, nursery rhyme that I say, there is no red, there is no blue, there is the state, and there is you. But in supplements or a substitute state with money printer, and you got the same sort of thing there. But I think that there's still this feeling for people that they can vote their way out of this, or like whenever you see the nouveau socialists talking about all the inequality, right? But then failing to talk about the actual underlying cause of like inequality is natural, right? But like extreme inequality, perhaps not, right? And how much of that is exacerbated by the money printing that is done, by the, those closest to it deriving the greatest benefit. If we talk about people still, maybe not understanding what Bitcoin's really for, but is that just a function of people really not understanding how broken the money is? Like, does that need to come first necessarily?
Yes, I think that the understanding of what Bitcoin is only comes from most people when they understand the problem. I think that we have had a problem, maybe bad PR for Bitcoin. We need like a new PR person or something, where we pound the pavement on like hard money and electricity and proof of work and all these things, and people's eyes gloss over and you can't explain it in 5 seconds. I think really, especially at this point in time, most people feel it, right? They feel the problem now. I don't think that was always the case in the United States. If you live in Venezuela or Lebanon or Iran, you certainly feel what inflation feels like and what hyperinflation feels like. But I think Americans, obviously, it's not something they've ever experienced in a way that it really blew up their lives. But now I think it's starting to, and maybe even the war accelerates that because the price of gas is so high. But I think that, explaining to people the problem with inflation and monetary policy in a way that they can really viscerally understand is probably the path to telling them about Bitcoin. even saying, listen, this is the problem. I think Bitcoin is the solution. Good luck finding your solution, but understand the problem, probably leads them to Bitcoin as well, because there's so few solutions, right? So I think speaking to people's sensibilities, to their rational brain that understands what's happening, whether they're being gaslit or not, is probably the path at this point. I mean, what you said, I've said this for so long, like I'm an unaffiliated voter. It's so funny. During the Biden years, everybody accused me of being MAGA, and during the MAGA years, everybody thinks I'm a crazy liberal and that I have TDS. It's just because I don't like politicians, right? And I understand that it's, to me, it's two sides of the same coin, because at the most fundamental level, the thing that's hurting people most is the money printer, and they agree on that. So everything else is just semantics to me. And so, you know, as I kind of said in that video, you know, everybody thinks you just vote harder for the other guy. There is no other guy. Like, that's the point, right? There's no Bitcoin party, and there's nobody who's going to be fiscally or financially responsible. And that opportunity for either party has flown the coop. So I think everybody understands that the price of their groceries are going up. You tell them that, hey, there maybe is a solution that I like for this problem, they might start to listen.
There's no Bitcoin party yet.
That's
You know,
right.
give it a little bit of time. No, I appreciate that. People should go check. I think the video is, I believe it's pinned on your profile on X, so people should go check that out. We are going to hit a very quick break, and then when we come back, want to get your take on some of the recent Bitcoin proposed legislation. A lot of talk about clarity has been out there, obviously, but recently Nick Begich, excuse me, has come out with a new legislation, a new legislative proposal based on the Bitcoin Act. It's called ARMA. I want to dig into that with you as well. Before we do, we're going to hit a very quick commercial break, guys. Then we'll be right back here on RoxomTV with more, so don't touch that dial. We'll see you in a sec.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV. The price of Bitcoin is $75,864 infinitely printable Federal Reserve notes per coin. And a bill recently hit the House floor that would lock the United States into buying Bitcoin for the next 5 years. The American Reserve Modernization Act, or ARMA, comes from Alaska Congressman Nick Begich. Here's what it does. ARMA authorizes the U.S. Treasury to acquire up to 200,000 Bitcoin per year over 5 years with a target reserve of 1 million BTC. It builds on the original Bitcoin Act that Begich introduced alongside Senator Cynthia Lummis, and it would codify President Trump's March 2025 executive order creating a strategic Bitcoin reserve into permanent law. More than 20 congressmen have already announced support. The bill classifies Bitcoin as a Tier 1 strategic reserve asset, putting it on the same footing as gold. It also ends the practice of auctioning off seized Bitcoin. Going forward, government-held BTC would be transferred directly into the reserve and consolidated onto a single audited ledger. The funding mechanism, though, is where things get clever. ARMA proposes what it calls a budget-neutral Bitcoin accumulation by revaluing Federal Reserve gold certificates that are still priced at $42.22 per ounce, a statutory price set back in 1973. The accounting adjustment alone could unlock hundreds of billions in paper gains with no new taxpayer debt. The bill also establishes federal custody standards, geographically distributed air-gapped storage, multi-sig governance, investment into quantum-resistant cryptography, and once Bitcoin enters the reserve, it cannot be sold for at least 20 years. Here to get his take on it, I'd love to bring back in Scott Melker. Scott, what's your read on this? We were just talking, off air here, that this is very, very similar to what the initial Bitcoin Act was proposed by Begich and Lummis. But what's your take on this? Does something like this actually make it forward? Is this like politically palatable to enough people across the aisle, or is this something that ends up dead in the water?
I have my doubts. First of all, I think that it's literally just a rebrand of the Bitcoin Act, probably a more palatable name. American Reserve Modernization Act sounds less specific to Bitcoin and more generally palatable. But I haven't seen anything that's remarkably different than what Lummis proposed at the Bitcoin conference, actually, right after Trump went on in Nashville, I guess now 2 years ago, right? Which is crazy to think about. So I think this has been on the table for a very long time. I think that clarity is sucking up all the air in the room for anything Bitcoin or crypto related. It's not Bitcoin related at all. Let's not conflate those. But I think, to the senators and Congress people who are dealing with crypto generally, they probably view that as the first priority. I think we're really on the clock right now before Trump likely becomes a lame duck, as you said before. Only a few more weeks really of legislative sessions before, they exit for July 4th and just start campaigning. So I don't think that this happens anytime soon. We would all love to see it. I think before this happens, it would be nice to even get an accounting from the government of how much Bitcoin they actually hold, which was promised a year ago in the executive order, and we haven't seen it. Every once in a while, we'll see some Bitcoin move from one wallet to another, and people speculate what's happening. I think we still know that, almost 100,000 of the Bitcoin that are on the balance sheet rightfully belong to Bitfinex and will eventually probably be returned. So I don't even know what our current strategic Bitcoin reserve is. It's hard for me to get excited about the United States government making plans to buy more, although I would love to see it. I think at this point, even saying this is how much we have and by law we are not going to sell it as opposed to by executive order would probably be enough to send other central banks into a buying spree.
I think that's fair. And, to be fair, we also don't have an audit of Fort Knox still. I think we were promised that. That kind of went away, didn't it? I don't know if they found out somebody got the call and they're like, drop the Fort Knox stuff. Like we're just. Do you think this is a sidebar? But do you think that we actually have the gold?
I think so. I have no idea, but that in this world, it just matters what people think, not what actually is real, right? So I don't know if we have the gold or not. I just know that it doesn't seem to be a priority for the government to announce to the American people how much of any of these reserve assets we actually have and rightfully account for it. So, I would think that how much gold we have in Fort Knox being audited would be a priority before adding Bitcoin to the balance sheet for the United States government. So listen, I do think we will have a strategic Bitcoin reserve of sorts by holding what we've accumulated so far, what we've taken so far. But beyond that, I don't really hope for much.
Yeah, that's. I mean, that's fair. It's like better to keep our expectations low with these things. I think too. I'm curious, zooming out a little bit, just from a political lens. Obviously, Bitcoin is not partisan, right? Like it is political. Money is political, but it's not partisan, right? It doesn't have a red or blue color on it, right? It's bright orange. That being said, I think Bitcoin and quote crypto more broadly, no thanks to the meme coin launches right before coming into office, have been painted with a bit of some Trump stickers have been thrown on there, right? And I'm curious if you think that kind of perception hangs around for the foreseeable future. Like, is this something that we're going to have to battle for a while? Because I'm in the same place as you, where it's like, look, I'm unaffiliated, right? If somebody does something good, I'm going to say that was a good thing you did. If they do something bad, I'm going to say that was a bad thing you did. A lot of people very much will defend till their dying breath, even the bad things that their chosen, anointed elites do. I'm curious if you think that we end up having to battle this perception, this again false perception, but perception nonetheless, of Bitcoin, crypto. That's like a Trump thing. That's a right-wing thing. And therefore I'm not going to give President Trump any win by letting anything related to Bitcoin or crypto, make it through the legislature. What's your feeling on that?
I do think that that's the case if they don't get this done now. I mean, Trump is what Trump is, right? You cannot deny the massive positives that came with him becoming president. The people that he's put into positions of power at the CFTC and the SEC. I mean, hell, even Health and Human Services. You have Robert Kennedy, who's a Bitcoiner, right? You have Bitcoiners literally everywhere because technologists won the election and technologists understand Bitcoin, right? So I think that part is undeniable. I think the executive orders were powerful. We did get the Genius Act, which, by the way, I'm not so thrilled about, but I think that the industry generally views that as a positive step in the right direction. And who knows with clarity. That said, like as with the positive, I think with Trump, you just always get the negative, and the grift is gratuitous, right? And the extraction from his followers, the timing of it. I mean, he showed us exactly what the presidency was going to look like when he launched that meme coin 3 days before he was being inaugurated, and then Melania launched, which I'm not sure that was his fault. But and what's happened since, and the amount of money that they've extracted. So listen, I think that we were in a perfect moment when he was coming in, where we had nothing but tailwinds for the industry as a whole, right? If he had not done that, I don't think there would still be talk of an anti-crypto army. Right? I mean, Elizabeth Warren, at that moment, you have to remember, all of the wind was out of her sails, and now she's completely relevant again. And if the Senate flips, she'll be the head of the Senate Finance Committee. Right? Literally, will be the most powerful person in finance in the United States, the one singular enemy that we have. And she was dead in the water. Right? And so, listen, I think we can both probably agree, that some of what she says is correct.
On the crypto side, yes. That's the thing. Bitcoiners, we agree with Warren on a lot of the grift side of things, right?
I mean, I agree with her that his family has enriched themselves on it. Do I think that that's a bigger problem than Nancy Pelosi flipping stocks? Not necessarily, right? So I think that we have to be honest across the board and treat everybody the same. Regardless, though, the Trump family and some of the own goals that we are pretty famous for in the crypto industry, not Bitcoin once again, have given endless fodder, I think, to the anti-crypto army if we see, regime change, which I really deeply have to believe happens in November, for better or for worse. Very rarely, as you said earlier, even if the economy is good, very rarely does a party stay in power for the full 4 years in all facets of the government. It's just very hard to govern and very easy to scream from the sidelines. So, I think that that's what's going to happen. So it could be House and Senate or House. I'm very actually scared of what a Clarity Act being pushed by Elizabeth Warren and friends could look like, right? If we don't get, even though I don't think the Clarity Act is perfect by any stretch, I'm not even sure I would want it passed, but I certainly don't want them to pass crypto legislation in 2 years.
Yeah, I'm there with you. It's
brutal.
It's tough. It's tough. We'll see what happens. Clarity seems to have some decent tailwinds now at this point. And at least there is, from the Bitcoin side of things, the only really relevant piece there is what was taken from the Blockchain Regulatory Certainty Act, the open source developer protections. Hopefully those don't get ripped out as some sort of bargaining chip. Let's see. The folks at BPI are doing great great work to try and make sure people understand the importance of that. But we've got you just for a few more minutes here. I do want to ask you, kind of zooming out on the let's say the crypto Bitcoin space more broadly. Something that I observed is that around the same time, all of the big crypto casinos all seem to implement prediction markets like at the same time, like the Coinbase, the Robinhood, the Gemini. And to me, this was just a signal, again, just my personal opinion, seemed like a signal that they went, you know what? Everybody's been calling us crypto casinos. Like, well, they're kind of right, but we're just going to take out the crypto part. We're just going to go straight casino. Yes, prediction markets have some value, right? But like 80% of the volume is just sports betting. So like, we can just be honest about that, right? I'm curious if you think there's a bit of an understanding or perhaps a behind closed doors acknowledgement from some of these big crypto companies that like, we're seeing what Saylor is doing where he's just building all these products based on Bitcoin. Well, it's a little too late for us to do that now. Let's just pivot to prediction markets and kind of cut out the crypto token middleman, just go straight to the gambling. And that's going to be our bread and butter here. Or am I reading too much into this and it's just all pure coincidence?
I don't know that they've come together to say it. I think it's just I think it's very clear where the puck is moving, and you skate there or die, right? And so I think, so here's what happened. I wrote an article actually about this on like one of the 2X articles I've ever written randomly, but where I basically said that prediction markets had killed altcoins. And this was last December, before prediction markets had really now, flown the coop. They've absolutely blown up. But my theory was that if we're being intellectually honest about the past for crypto, and listen, I believed in a lot of this stuff. I thought building the technologies of the future, and, I didn't deeply understand the tokenomics or how much of a scam maybe a lot of it really was. But I think there were important things that were being built, right? But the fact is the tokens were largely not investable, and people didn't realize that. And when you're intellectually honest about what they were, it was a big casino that ran 24/7, 365, and altcoins, regardless of their utility or their use case, were just the chips in that casino, right? And you can argue with me and you can be offended by that, but it was the only 24/7, 365 casino that was decentralized, that a 14-year-old could probably show up and flip a meme coin like they were betting in Vegas. Well, we're not the only casino in town anymore. And if you're wondering why there's been no altcoin cycle, it's because there's only so much money that wants to gamble, and it's gambling elsewhere, right? And so I think prediction markets were the first iteration of that. Then I think the hyperliquids of the world, and you're seeing all the exchanges do this as well. When hyperliquid added silver and gold, they started to be a meaningful percentage of the silver and gold trading market, especially on weekends when those markets were closed, and then started doing 700 a million a day on oil, like on a weekend, when that's largely closed elsewhere, and became a real player. And now you look, so hyperliquid, like think about this rationally. Who was trading on hyperliquid before that happened? The same crypto degens who have been taking money from each other for the last 5-10 years, right? They just found a market where they liked doing it better. They trusted it more. It was decentralized for whatever reason. Well, those people found more volatile, more fun assets to trade on their home casino. And so altcoins just never moved, because trading silver and gold gave more opportunity, and trading oil then became more opportunity. And now trading with leverage on the weather, right? Because that's coming, right? They're adding full leverage and perpetual swaps to the prediction market. So yeah, I think, listen, an exchange's job is to provide the assets people want to trade and be agnostic about that, I think. So I don't think it's necessarily like a negative thing. I think the negative thing is actually, what does this tell you about where society is at, right? It goes back to our conversation about why Bitcoin. Because if you look historically at any time that speculation has become this rampant, and there are plenty of other times in history, obviously they couldn't do it 24/7, 365 online, but in the Weimar Republic, when people were having to, wheelbarrow their money to the store to buy bread, speculation, lotteries, gambling was rampant, because people only do this when they're completely desperate and don't see hope in the normal system for them to stay afloat. So they go gamble to try to get ahead. They play the lottery. They do the things that they need to do because they can get rich quick and save themselves. So I think that the volumes we're seeing on these things, how many people are speculating on these wild things where they have no edge, provably actually the odds of you winning are very, very low. If you take any look at the statistics on the percentage of accounts that are profiting on prediction markets, or the percentage of accounts that were profiting on meme coins, it's 1 or 2% of the people who are playing are taking all the money, right? You're not playing in a fair casino, but people are willing to throw their money away at the chance that they can just get ahead. So I think that this is more a symbol of how bad people feel about their money right now than anything else.
I think that's spot on. It's like when when the money breaks, right, everything else tends to break with. And you can't blame people entirely either, right? It's like people are just trying to get off the hamster wheel that is apparently on fire right now, and they feel like they've gotten, like, nobody's interested in trying to save wealth slowly with Bitcoin, right? They want get rich quick. Like the Bitcoin, you know, is too slow from that perspective, not transactionally, but it's too slow from a, like, people don't want to wait that long. They don't want to hear, well, just hold on, buy it and hold on to it 4 or 5 years and you'll thank me then. It's like, I need like 4 or 5 minutes from now to feel rich. Otherwise, like I'm out, you know? So I don't know. We'll see. It's probably going to get worse before it gets better. But
way worse.
Yeah.
Imagine if stocks turn, you know, like this is all happening while
yeah.
stocks continue to make new all-time highs. These assets generally are performing well. There will be a flush. I'm not saying there'll be a Great Depression or the stock market will go down 75%, but all those people will get flushed, right? It's the way that markets work. And it's going to be really sad when it happens, you know. I'm not a doomer by any stretch of the imagination. I just see these things as massive signals of where things are likely heading.
Well, I appreciate you breaking it all down for us, Scott. It was great to talk with you here today. Really appreciate you sharing your time with us. And people should go check out that video if you're listening to this and you're still not sure why Bitcoin. That was it was a banger. Where can people go to find you though, to see you've got, you know, multiple shows and things you do? Where can they go and follow you, find the work that you do?
Sure. I mean, everything is branches off X. So you can find me at Scott Melker on X. As you mentioned, you know, I've got my YouTube channel by the same name, but then now every day at noon, I'm on Yahoo Finance for a show called The Daily Wolf, where I just kind of rant and rave about the news for 15 minutes each day. But that moment, I decided to kind of give up on the news. And I had never really taken that moment I had taken for granted that we just showed up and started doing this show. Right. And I had never told that audience why I care about doing that show in the first place. And it just sort of happened. And I think that's why it resonated with people. You know, you've hit the nail on the head after all these years when you see tweets that say, I hate this guy, but he's right. Because I got so much of this guy's a grifter, but he got this one correct, you know? So like, you know, that you finally said something that's meaningful. But yeah, those are the places you can generally find me.
All right. Well, appreciate it very much, Scott. Again, thank you for sharing your time. This was a pleasure. Thanks for coming here on RoxomTV. And thank all of you out there who shared your time with us. My name is Walker America. I'm here every Tuesday from 1 p.m. to 4 p.m. Eastern Standard Time. You can also catch me on Thursdays and Fridays with Hank at Roxom during our show that we co-host. So go and check that out as well. Check out all the other great programming we have here on RoxomTV. And until next time, stay free.